Music even on? Okay. Alright there. Wait, hold on, right there, like that. There we go. Stream marking. Work streams. So we streaming. Alright, so I told myself I'm not trading this week. Main reason why is I think you can hear it in the voice. I'm a little sick and I just don't want to be placing trades. I did place one trade yesterday, if I'm being completely honest, and I'm gonna show you that right now on the phone screen. It's gonna be the 10K account, I think. So let's show you this week. Connect it real quick. So MetaTrader 4, and the date. So Monday's 30th, and then today is pretty much. So it's October 30th through today. Alright, so let me show that real quick. So here you can see it, the date. So this is the 30th, and that's pretty much it as of today right now. So I haven't taken any trades except for this one. It was a euro short, and this was on 30th. So the 30th was around here. I took a euro short, and I just didn't hold it. And then this is what happened after. It's clear market maker models being formed here on euros. Clear. But if I was to take a trade, I would probably have to bid on GU probably today because the SMT. That's what I was looking at. You see, we swept London highs around 10:45, and clear market maker sell model formed. Would have been a good trade, but there's FOMC today, so I'm just gonna be tape reading. I can't even show you that. Hold on. Oh, there was clear SMT for GU and EU. EU never swept out these highs while GU did. Let me disconnect my phone. So I'll be streaming. I said I wasn't planning on streaming until I felt better, but you know, there was big news today. You can see that here. Let's put this up here. There's 2 p.m. news, and then there's 2:30 news, and then it's 4:15. Also made some big changes on the chart, as you can see here on the time frames. I don't think I'm gonna be dropping anything further than the 5-minute. I know I'm probably gonna miss a lot of setups, or a lot of people are gonna be commenting why. It's because yeah, no, I just don't feel like dropping anything. Probably the 3 minutes, probably the lowest, but I don't know. If there's a clear setup though that I can see that can transpire on the 1 minute, I'll drop to the 1 minute. You know, I'm just not gonna try to focus more on it, but I'll still drop to it. I'm not gonna ban it, but I'm not gonna try to focus more on it. That's why I have these are just main ones I'm focusing on. But yeah, no, I'm just been very sick. That's why I haven't been trading. I just think trading while you're sick is not is not really good. I think that's the worst thing you can do, honestly. Because then your emotions are gonna just skyrocket. Even if it's like demo or paper trading, I don't even think you should do that either. Because I was about to take a demo trade yesterday. But let's go over every market. I want to go. There's something I wanted. I haven't been charting either. I haven't charted. That's how you know I'm not ready to trade. I don't trade it unless I chart. And that day with euro, I didn't chart, so I was like, you know what, I'm gonna cut the trade right here. And I just didn't want to trade it. But if we go to every market, let's go over first these right here. Start off on the daily here. Daily time frame. Let's go to the weekly actually. Right here is gonna show you the symbol and the time frame and then the date. So if you're lost, you're confused, and if you're looking over here, of course you're not gonna see it. So but look over here. Same thing with this one. You have to look over there, and this one too. Oh, no, I think these have the symbols. I'm tripping. So only just this one. Dollar index, we're above the premium with consequent encroachment, even though we haven't been respecting it recently. So we're above it right now. I'm about to hit this consequent encroachment on the monthly, and I'm gonna be watching to see how we react to that SIBI. We're gonna be hitting a premium. So I need some water. We'll be hitting a premium soon, and so this is probably the new monthly high. I need to mark it out a little bit better. So yeah, I haven't. Let's probably do that to the other ones. Let's do it to every single one of them. Previous month high, previous month high. We did start a new month, I should say. So it's monthly high, monthly low. I'm doing it here with you live, ladies and gentlemen. So yeah, we're gonna do the weekly high too, I think. So we're just gonna do top down and everything, since I haven't been trading. So this one's already above it, I think. Hello, what's up, Adam? And then same thing for this one here. We have the monthly high. I see it's retracing maybe to like 50% of this range of this candle here, and then we drop. So I'm being completely honest, that's what I see. Probably to like 50% here, especially for the indices. Look clear. It's clear we went lower. ES has relative equal lows right here. It's easy sweep. Look below these lows right here. We sweep those and we go higher. But let's go back to dollar index. So monthly, we have that sell center balance. I'm watching, especially right there. I want to see if we hit consequent encroachment and then we start dropping, or if we run above it, make it an inverse, try to get the buy side. I'll be watching that, of course, external to internal. So that's what I've been using more. It's internal resistance to where's a little to external resistance, liquidity, internal resistance, or yeah, to external. As simple as that, just like that. Do you have any tips? I'm just showing you right now. Like, you got to do a top down. You got to do a monthly to weekly, daily. That's how you find your daily bias, really. If you know what you want for the week, then you're gonna easily find. There's like weekly profiles. So I think GU created that high of week. I think it was GU, right? High of week Tuesday. Yeah, and we're gonna drop after that because we're bearish. Because on the monthly, we're bearish. I see us coming down here, maybe coming to the buy side for sure, taking out these lows. Weekly lows, consequent encroachment, taking out these lows. Just clear movement lower. But let's go back to the weekly here. We're gonna draw the previous week high, and we're gonna see if price is just continuing to go higher. So I want to see us take out the previous month high. There we go. No more external resistance right there. It's previous week high above the inversion fair value gap here. Came down. Low of week Tuesday. I think we're gonna rally up. We do have NFP Friday, so I'm gonna be very cautious about that if we come back down, and then probably continue to rally. I think this is a propulsion block. Yeah, it seems like a propulsion block inside of another order block, so it's pretty clear it's a PB. It's a propulsion block on the daily time frame. So I'm gonna see that if that can be a means to push price higher if we come back down. 4-hour time frame, we're hitting that sell center balance on the 1 hour. We have highs up here. I think I'll just target this one up here for sure. This one up here instead of these right here, because these are likely to go through. I think this is gonna probably push price higher to get this one up here. 1 hour time frame, same thing, just the SIBI. So yeah, I think we're just gonna rally. It's a clear market maker buy model here, right there. This one seems like to me forming a little market maker sell model. So if we come down a little bit, I'll probably be looking for the order block, and probably these lows get taken out right there. Then we rally higher. But I don't even think we see that coming. For sure, I don't think we see that. Crypto. I've been watching crypto, man. Crypto impact. Let's go to crypto. XRP. I missed my entry on XRP. I was trying to short. I was trying to go long as soon as it tapped the consequent encroachment of this right here. So I kind of missed my entry here. So I don't think we're gonna get it, honestly. Came down and wigged down all the way down here. Institutional order flow entry drill. It didn't come down to halfway. Rallied higher. We used the premium with consequent encroachment right here to push price higher. Became an inversed, and it just respected it. It just rallied higher. ETH and Bitcoin have been more inside of a range, so I'll just be likely to see if we break out or if we break up. break out of it, or if we break, yeah, no, if either side gets taken out, then I'll probably be looking to target either side. Since it is more inside of a range. I would prefer, though, if we do drop, it just seems likely to me that if we drop down to the breaker, maybe then we start rallying for ETH, and then probably take out these highs. It's gonna take a while. It's probably gonna take a couple weeks, so I'm gonna be setting up my futures, perpetual futures accounts, putting some money in there and try to take some longs on ETH if we come back down. I'm gonna set an alert too for sure, but I'm gonna not try to be as precise as the XRP trade was, because we did miss our entry, and that kind of made me a little, not mad, but like just a little frustrated, because it would have been a W trade, you know. But I think we just had too much precision. It's something that you don't need with crypto. As long as you're right in the direction, then I think you should be good, you know. There's not too much you should really be tripping about. That's something I need to work on. So yeah, I'm just be waiting to see if we come up. When we come down, rally up. I want to see if we make this an inverse too, though. The south side of balance, make it an inverse, come back down to at least 50%. Or yeah, no, probably will create another fair value gap there and probably come back down and then rally for the weekly. So yeah, I'm gonna be watching to see that. Solana, I think we're just rallying, pumping up. Take out all this buy side already. Take out this high too. As soon as I saw that, I was like, damn, yeah, we're just pumping, bro. If we go to the monthly though, it just looks clear, clear. This one too is inside of a monthly Sibi. Oh, not yet. Let's put this as a, let's put it as a Sibi though. We'll change the color though for sure to make it black there. I don't feel too good, man, but that's why I'm not trading. So let's go to the weekly. We're still yet to get there. I think next objective after these highs will probably have to be these right here. These little short-term highs for sure. This one's already been purged, so I'll probably have to see these highs get taken out now. These got purged really hard, so let's just delete this right here. Target these now. I would have wanted a breaker to form if we came down a little bit further. Take out these lows right here. So it would have been a clean breaker. Like ETH is forming right here, clean breaker. Want to see us come back down and then eventually enter. I'm gonna just be more patient for that. Solana, I don't think we're gonna get that, honestly. I think we're just gonna continue to rally, and we just filled up this big imbalance by now, I think. So I just see us continuing to rally. I think I don't think we're gonna come back down, especially maybe actually though, because we did take out the buy side for these highs. But if that was prominent, then of course we should have been probably dropping right now. Not going up above it and about to close above it soon. Hello, hi, what's up guys? I'm going over the Bitcoin, I mean not Bitcoin, the crypto analysis. I'll go back to the Forex now. Let's go back. Alright, so I don't think I did a monthly on this. Okay, yeah, we did. So for the weekly, we have our previous week low. We have taken that out, and we're just hitting the discounted with consequent encroachment. I think this one, just take out this high right here. Boom, dropped. Hit the premium with consequent encroachment. No, I don't think we did. Yeah, I would have. The monthly previous month high would have been overlapping. We didn't get that there. The weekly sell side balance though has been respected multiple times. You can see that even though the wicks of the damps, the bodies are just closing below it every time. It's a clear range rejection block yesterday. We had a little rejection block. We tapped up into it and we rejected. So that was pretty prominent. Mean threshold of this order block here, I think on the daily, is not being respected because it just seems like we're about to close below it. So I'm gonna take that off. Discounted way consequent encroachment did get respected for the first Friday, and then eventually Monday too, and then eventually created like more of a market maker buy sell model, I mean, and it just had to close below, I guess. 4-hour time frame, we can just see it again, clear market maker sell model. As soon as this became inversed or a balanced price range, you can just tell it was not you know, most likely gonna come and fill that up. So yeah, and then for the 1 hour here, you can just see yeah, just big market maker buy model and then sell model. Buy side to the curve, I mean sell side to the curve. This was your original consolidation right here, of course, for the big move up, and then eventually, yeah, it just came back down, passed it up. I would say this kind of like an AMD, but this is too much of a manipulation phase, and the distribution isn't strong enough for. And yeah, it can be, I guess, if you view it like that. Big sell side imbalance here though, from the inverse on the daily, and then as of just today, the news, you can see we came up, then we just dropped. So it was just clear. That's why I didn't wake up on time, and I don't plan on trading this week either because I'm sick again. I don't like trading when I'm sick. I don't know if y'all trade while y'all sick, but I wouldn't recommend it. Last year I tried it with options, and I would say that's kind of why I lost so much too. Not even blaming it on that though. It was bad decisions, motions, all that stuff just came into place. So I don't want to try it ever again either. So let's go to GU. Hold on, let me read the comments. Let me blow my nose up, read real quick. Let me get some water too, and I'll be right back. Be right back. Hold on. Not too long. Let me see. If I'm trading like NASDAQ and then SPX, I don't know which one will be better. Like if I wanted to short, which one would be better to short based on certain conditions. You use SMT for that. Make sure you guys drop a like on the stream right now if y'all are enjoying the stream, if y'all enjoying the analysis, or if y'all just, I don't know, if y'all just enjoying the stream. I would appreciate a like. But SMT for sure. Usually you want to have a bias though for sure, and if your bias is fitting with that SMT, so say you were, I think yesterday would have provided a lot better for sure. So yesterday here, you can just see NASDAQ right here on this side, NASDAQ and the SPX. So you were long, or your bias was long because you just the order flow was bullish, and as soon as you see NASDAQ come down and take out Asia lows while ES never did, that just goes to show strength on ES, and NASDAQ showing weakness. So longs would have been they would have been ideal for this one to catch up to this one. So you could have taken longs on NQ as soon as it had a turtle soup, SMT turtle soup, usually the most powerful turtle soup, or you can just drop down to lower time frames, wait for more confirmation, and then eventually take the trade. So yeah, all the world is sick these days. Yeah, no, it's getting to that winter season. Let's go do analysis on GU now. So GU is kind of more of it's one of those pairs where it's more back and forth, I would say. I kind of prefer Euro right now than GU, but I mean clear again SMT here for GU and EU. GU took out these highs during 10:30. NQ never took them out, so that was clear SMT there. Took out London highs, and then just clear. Well, this one never took out Asia highs. This one did. You can see just clear. It was been clear all day. This one's very strong. This one's very weak. So this kind of wick consequent encroachment on the daily is still yet to be hit. I think this is the premium. This kind of wick on the weekly. So I want to see this one get close below, and then I'll eventually delete it, or I can use it as an inversion as soon as we close below it. So it it's only a matter of time, honestly. And then on the weekly, we could probably use this right here, the consequent encroachment of this right here. But I don't even think we're going to come back up any further. I think Tuesday created that high of week right here. And if we draw like the previous day low, I want to see us close below that for sure. Same thing for this one, but the previous day high is not going to most likely be tapped into. I just want to see the previous week low get close below. The 4 hour here, we have the discounted wick on the consequent encroachment of this. I'm gonna delete it though because I just see us take it out the low if we drop any further than that. So it's kind of clear. I'm gonna leave this one here though because this one already has the dots. So I just want to see us close below this. Probably close even below I forgot that I got took off session breaks. So let's see it like that. There, I can see it. All right. All right. So I just want to see us close below here, this low, and then yeah, that's pretty much it, honestly. So for the 1 hour, we can just see again just a little market maker sell model here on the 1 hour. This looks clear. This one again is not ideal during the ideal time for the market maker sell model to form. Smart money reversal. Again, it was kind of just like near equilibrium too of the range. That's kind of see why that's one. Didn't get it didn't even come near equilibrium, so yeah, it just wasn't ideal for sure. The timing either, you know, the time element, and then oh no, we're too high on the time frame. It's new day opening gap. This new day opening gap got respected. You can see that 10 o'clock. This new week opening gap is being tapped into right here. You can see that. This new day opening gap again. New day opening gap and new week opening gap, something I've been sleeping on a lot. I've been trying to just use it a lot more recently. That's something I've been trying to do a lot more. Just use that for sure. And then let's make this one white right there like that. Same thing for this one. Blue and yellow. So yeah, just clear. And then let's go to the 15 minute. Let's see what the 15 minutes offer. Yeah, no, I just took out London highs earlier. This one took out London highs. This one never did. So it was just looking like this one was a weaker, stronger one. I mean, very ideal to short. Reason why is because, you know, we've been bearish. Tuesday high week, your weekly profile here. Wednesday's more of a continuation day. But we do have FOMC later, so I'm going to be very cautious to see if the weekly profile here forms differently. If we rally up or if we rally down, it's going to just try to determine that weekly profile and just see, you know, how we continue the next day, Thursday for sure, and then NFP is Friday. So I'm going to try to lay back more, not trading any of these days anyway, so it just really doesn't bother me. I just want to see how it forms though. I guess I want to stay more updated with the market. So USD CAD, we already marked out the previous month high, the previous month low. We did sweep this liquidity here on the weekly. We're gonna move it up to the side, and we're gonna draw the previous week low. I don't even think we're gonna come down anymore, honestly, unless we sweep the monthly high at this point, because even if we break above that, I don't even see us coming down eventually. It just seems clear, you know, US CAD is just very, very strong right now, especially with dollar too. Until I get signs of reversal from dollar, then I'll probably be looking to, you know, just start seeing signs of reversal on USD CAD. It's really that seasonal tendency, you know. If the market moves, it moves, bro. It keeps going in the same direction too. It's pretty hard to not follow that direction unless you're not in tune with the market. So we have a little down close candle here in a bullish environment. So this would be my first PDA right here. It's an order block. Order blocks usually are the strongest whenever they take out liquidity or near equilibrium of a range. So this one gets ran through, is kind of seen as a weaker one because it's near none of those. It's near a high, of course, and another high up here. So if we don't hold that to push price higher, then I'll probably see a smart money reversal, use it as an inversion to push price lower. 4 hour time frame, we had that 4 hour inversion fair value gap here. I think there we go. Yeah, let me fix it. So we had that 4 hour inversion, and then price never just, it came back down eventually, then it respected it for higher prices during the news. I think this is okay. Yeah, no, it's the previous month high right here. So I was just tripping out. I gotta wait for more of this month's type of more data, I guess, for the month. So let's go back to the 4 hour. Clear these lows. I wanted to make sure we took out these lows. We never got that though, so I was very disappointed there when we never got that, because I just see us coming down for sure eventually. Let's go to SPX here. These ones that haven't been charting as much. So weekly time frame, we have that weekly inversion. We are coming near I'm gonna get rid of these levels because I just don't see us coming back up eventually to those. We are hitting a south center balance on the daily. This kind of wick on there and the order block there. So we tab both of those premium arrays. This would look clear for shorts. I'm gonna get rid of this south center balance here on the 4 hour though, because those daily confluences are way more important than that 4 hour. So I'm gonna try to keep those clean. So we have that daily order block being respected with the discounted wick. So I want to see us use that discounted wick as in means to push price lower. Again, just a clear market maker sell model here forming. I wouldn't be looking to short, or I mean to go long right now. I'll be looking just to hold it a little bit less for shorts. I'll be more patient right now. Let me go text. I need to do more research on studying. So that's one thing I'm trying to research more about. Like, how can I get better like study results when I'm studying? Like, what workflow can I do? Energy cycles, blurting. I'm trying to remember key concepts and facts without looking at your notes or notepads. Help strengthen your memory, retrieval skills. Feynman technique, named after resist. Richard Feynman technique involves simplifying and explaining complex topics as you were teaching them to someone else. This helps process you identify gaps in your understanding and reinforces your knowledge. Clear. I'm just not going below the 5 minute no more, honestly. The 3 minute is probably the lowest. I think I'm probably at 3 minute. I probably won't go anything below that though, as of right now. And then what else? Energy cycles. Energy cycles refer to understanding your own energy levels and working in alignment with your natural rhythms. Some people are more productive in the morning while others excel in the evening by scheduling tasks according to your optimized productivity and focus. Second brain. The concept of second brain often refers to using external tools like note-taking apps and digital resources to store your organized information. This frees up your mental capacity and enhances your ability to recall and apply knowledge. Parkinson's law states that work expands to fill the time available for its completion. In a study context, this principle suggests that setting deadlines and time constraints can help stay focused and complete tasks efficiently. Spaced repetition is a learning method that involves reviewing information in increasing intervals over time. It is designed to help you remember and retain information more effectively by revisiting it and just before you likely to forget it. So yeah, I'm just use those task thingy-majiggies to help me. Hey yo, are you still sick? Hope you get well, brother. Hola, Devin. Yes, I'm still sick, guys. But I was just reading about something about studying, because I'm trying to get better at studying, and not just with trading studying though, other things. But oh yeah, I was going over SPX, market maker sell model here in the higher time frame. Looks clear, low resistance built up right here for sure. Let's put this like that. Clear low resistance liquidity built up for SPX here. So like that. I do eventually see us coming and taking out those lows, but what is this? Wednesday high weekly profile. I don't know. It seems kind of, if we hold below the consequent encroachment of this sell side imbalance, then I kind of see us probably doing that. If we don't, then yeah, no, I'll probably be a little bit more cautious if y'all were trading this, of course. But first objective will probably have to be these lows, or 50% of that range for sure. So I'll just be very, very, very careful. And then inverse right here on the 15-minute time frame. Look for SMT here. I don't think there was any SMT. Probably, yeah, no, this doesn't seem like there was SMT here today. Everything seems clean for the indices. The 5-minute, 3-minute broke below these lows, came back up, broke below these lows, came back up. Clear market structure, simple market structure. Probably the 15-minute inverse was probably the best for sure. Just to see hold price go lower. As soon as you closed, we came back, tapped into it. Then we dropped. So, same thing for, let's clean up the chart here on this one. This is a discounted wick. I don't know why it says premium. Discounted wick, cost of encroachment. I don't even think we're going to use that anymore. Let's see. Let's just keep it on there. I was thinking about going over every market after this one, though, of course. So, we have a sell side imbalance here on this one. What up? What's up, all out? This one is a little bit bigger than the other one. On NQ for sure. So, let's see. 2 up close candles. I would say this kind of is an order block. So we're just gonna see if we come up and hit the order block and then drop. If not, then I just don't see us probably respecting the order block. And if we close above, I see us making this an inverse to the sell side. Start with from Dixie. I already did Dixie. 4 hour sell side imbalance still being hit right now. I'm gonna take that off though because we have an inversion too right here, so I can see us coming up, probably hitting that then dropping as we are right now. Again, it's just a clear market maker stall model forming right here on these. Just very clear to me. Probably these again, yeah, these lows will probably look a lot better because ES low resistance. This is like kind of a high resistance, especially with this right here being taken out right there. I don't think ES did that. Yeah, ES didn't do that, so I probably see ES sweeping lower than NQ. For sure, NQ probably gonna sweep these and then start retracing. ES probably gonna go all the way lower and just take those out. All this right here. So probably the 15-minute inverse 2 on here on this one. Yeah. So another 15-minute inverse. This one has, oh, this one barely just closed below it. So yeah, NQ is a lot stronger than ES right now for me. Since this one, the inversion right here closed way below a long time ago. This one just did it like the past 2 candles. So yeah. So today's, you know, you just gotta want to wait for FOMC and see what the market offers. Why is it buffering a lot? Or is it just me? Is it buffering a lot? Let's see. I mean, the KBS looks good. Stream lagging or what? I don't know. I'll have to go check it out. But what's the music? Let's go to a different market now. Let's go to AUD/USD, a market I was looking at since yesterday. A bit. It's lagging a bit. I don't even think I got anything open. Let me just close Discord up. Go to taskbar settings. Let's see. Not even taskbar settings. Go to apps. Default startup apps. There, let me close up Elgato. And then I think, yeah, we should be good with that. It's all right. All right. Let me just continue then. Let's do a daily, monthly time frame here on this one. So the monthly, just using this right here. Let's add the GAN hand box. Where's it at? For right now, let's add it here for right now. Let's take it off. It's not even moving. Let's use the regular fib. So from this low to this high, deep discounts for right now on the monthly. So I'll be looking to see if we take these lows out for sure. This little external low on the weekly for sure. Or you can just, if you zoom in, it's on the monthly, you know, it's external on the monthly. If we take this out, if we don't start pushing price higher back up into a premium, I'll be looking to see this rejection block here on the monthly. And then if not, then the halfway point of this wick for sure. So but as of just right now, I do want to see lower prices for sure to that external level right here on the monthly. Again, just internal to external. That's probably the only way I'm trading right now. Just internal resistance right here to external. I'm just targeting external right now for right now. Some water. On the weekly, we can't even see anything though. Only thing that really caught my eye was probably these gaps. Little breaker here. Just a little breaker, I guess, here if we close below this. And then on the daily, we had that sell side imbalance. So, by the way, TFT, defunded trader, I think, and are going to give away 105 to 10K accounts to the last 100 people that comment on their posts over on Twitter. Goes till November 2nd. Might be worth checking it out. Don't know what time zone they're in though. You gotta fill out some form though. 5 to 10K. I'll go check it out right now on my phone. Probably on the PC actually right here. See what's up. So, what is this? A 4-hour level? Okay, yeah, no, it's a 4-hour. It's a 4-hour low. So back to the daily here. We have a sell side imbalance. We've just been respecting it multiple times. We've been inside it for a very long time. We had the premium wick of this consequent encroachment, and we tapped up into it, then we dropped, we came back up, tapped into it, and then we dropped. Just clear. We're respecting it multiple times already. This one forms a lot of market maker models, and you can just see this one right here formed. This one formed again here. Another one formed right here. Whoa. This one just formed right there. This one formed all this right here. It's just clear market maker sum models. Again, you got to use external to internal, and then external to internal or internal to external. So right here, this is kind of like an internal range of liquidity, the buy side imbalance. And then I would probably be targeting these external lows right here, probably for the 4-hour lows for sure. So the 1 hour, we swept these highs, or yeah, we purged them actually. Doesn't look like same thing really, honestly. So we purged those highs. Let me make this indicator. What is this little thing here for everything? Because I use it for everything, honestly. Not like one time frame that I don't use it on. Probably the only one I don't use is the money one, so let's get rid of it. I don't use that one. I use all the rest. So which other one that I don't use? That's pretty much it, honestly. So you gotta fill out some form though. Oh, right, okay. So you gotta fill like a Google form. I see. Okay, then we purge liquidity, 15-minute time frame, just clear market maker model, inverse. As soon as we close below this right here, we came back up, tapped into it near the. I don't even think we came. Did we tap into it? We barely missed it. Barely missed it. So again, we formed another one. I would probably want to see these lows get taken out soon though. right here. This one, another inverse. So I'll just be watching to see if we come back up, retrace, and take these lows out eventually. This one does move a little slow, so probably during FOMC, I'll probably likely see this happen. If we break above this and just continue to push higher, probably these highs up here, or maybe a PD array, like a sell side imbalance that formed recently. Did we close below this? Let's see. No, we still have yet to close below, so it's not an order block yet. I would like for it to become an order block, because this would took the order block took our liquidity, and then eventually, form the order block. So that would be a very, very powerful order block in my opinion. Order blocks that take out liquidity, by far one of the most important ones. I need to go review the material a lot more, but I'll go check out the funders right now, on their Twitter. Let's go check it out after. Let's just do it right now. Let's do it right now here on the stream. Let's see. What is it? TFT? TFT? Defunded trader? I think that's what it's called. Okay, let's go look. Let's go look at this promotion they got going on. See the chart there. Alright. All three promotions are still active. They'll end Thursday, November 2nd at midnight. Giving away 100 accounts to the last 100 people that comment on this post. You must fill out this form to be eligible. So it's going to be a Google Doc. So your email, your legal first and last name, what links should look like. Please provide your full social media for verification. Your full Twitter X, full Instagram account. What is your full YouTube account? What is your Discord name? What is your TFT Trade Hub email? And then I would come back post hourly to check. Good luck. Let's go. Nice one. How many people have viewed this? 44,000 people have viewed this giveaway. It started on November 1st and it ends November 2nd. That is crazy. What is this? 50% off, 100% refund. End date October 31st. 5350. What is this? That is not bad at all, honestly. All three promotions are still active. This one right here too. And I'll probably get this one right here, but like another 10k with 50% off. Let's go look at it. Let's go buy a funded account right now. Last time I got a swing account, I didn't want a swing account. I got a swing account. I was supposed to get a regular. It pissed me off because of the lot size or the leverage. Watch, 1 to 60, and then this one was 1 to 200. So let's see standard. I think the standard challenge for me is probably honestly the best. 10%, 10 max, 5% daily loss. Let's look at the rapid. 8, 8, 5. This one's pretty the same. This one's pretty much better, but I think the. Okay, no, yeah, that one doesn't look too bad either. Royal Challenge. 8%, 10%, 5%. This is probably the best, honestly. 10, 6, 3. Damn, this one's not. What is this? One step? Okay, yeah, no, that's why. This one step too. Okay, yeah, no, I think this one's only the 1 step one. Yeah, okay, that one's only 1 step. Step 3? Damn. Okay, yeah. I am bugging. Okay, no, I'm not tripping either. What does this one have? This one's pretty the number one. Wanted to get a standard 10k one. Still gotta figure out some stuff in my bank. So just you want to get it a standard 10k. This one even offer a 10k? This one doesn't offer a 10k. Damn, that's crazy. You gotta have at least get a 50k. How much is it for this one? Doesn't tell you. Oh, 289. It's not even bad for a 50k. I seen like 50K accounts go for like what? Actually, no, I think this is bad. It's kind of a lot. I used to don't even see them going for this much. The 10K is like usually 100. Well, it's 50K though, so yeah, probably like around there. Yeah, it's a good amount actually. It's not bad, especially with the challenges. I'll probably get a standard 10K swing or a regular. So yeah, I'll probably get this one. Seems regular. 1 to 200 leverage though. That's kind of fucking crazy. 1 to 200, bro. That shit's insane. Holy moly. I never heard a platform have that much leverage. Usually, like standards, like 1 to 100. 1 to 200 though. That shit is insane. That's a lot. No, I don't think that's regular. I said I was gonna go over every market. Let me do that real quick. I'll probably get a 10K though, cause the swing one I already blew it. I'm not gonna lie. I entered a trade and I forgot I even entered it, bro. That's how bad it was. Like I didn't really even care about it, cause the leverage was horrible. Couldn't even risk much. Like it would just trade money, or trade is disabled if you try to risk too much. It was very ass. Unless you're a swing trader, then of course, yeah, just trade with it. But I like being in and out, so it just wasn't ideal for me. Especially on indices. The indices, you'll be capped a lot. Forex, not really though. Yeah, I'll just be watching to see if we come back up here. So this is what I want. We come back up, break below these lows right there. Just come back up right here, and then drop. Take these lows out. We do got FOMC though, so I'm gonna be kind of a little bit more patient. Let's go to GPB JPY. That's one I was watching yesterday. I was trying to, I won't lie, I was trying to take a trade here on this one yesterday. Let's clean all this off. Actually, let me show you where I was trying to take my trade. It was around, what was it? It was with USD JPY too. So this is right here, I think, right here. We had a breaker form. There was a 15-minute SIBI. I remember it was a 15-minute SIBI, right? I think it was this one right here, yeah. It was around here. I was watching the market around, yeah, later that night. I was like, all right, clear market maker sell model here performing. And I was like, damn, this just looks clean. But then I was like, damn, JPY is like really bad because of the Bank of Japan just, you know, fluctuating their monetary policy, just taking out a shit ton of orders on these markets. It's like JPY is just not good at all, especially USD JPY right now. I would probably stay away from it. But we had that 5-minute balance price range. We tapped up into it, then we started dropping. And no, I think that's where I took my trade. But I think I cut it up because the spread was just really bad on the market during that time. Like the spread here for this one was like around like 30 to 20. So I was like, yeah, nah, just like your order gets filled, but then you're still like in drawdown all the way to down here. You know, I was like, man, it's not worth holding. So I was like, I would just cut it. But yeah, nah, 33 o'clock is probably the best for London kill zone here for these, especially for sure. For these right here, they're in London. We swept up Asia highs or Asia lows, whatever you want to say. What is Asia? It's 20 o'clock, right? Yeah. It's kind of like an AMD, I guess. Accumulation, your manipulation, and then your distribution down after that. All that distribution. As soon as you pass these lows up, you know, so you continuation for the distribution phase. Where is the new week opening gap? Damn, these new week opening gaps are tight on these JPY pairs. That's what I'm talking about. Very tight, bro. There's like no gaps. Very, very tight. So I'll probably be very cautious on these for sure. Let's clean up this monthly. So yeah, this is what I'm watching here on these time frames. I think I'm gonna just take these off for sure. What are these daily? Why are they showing up on the monthly if you're dailies? Hold up, buddy. This little external resistance on the daily is just showing up on the weekly, on the monthly. What's going on? Previous month low and then previous month high. This one didn't even have a wick up. Damn. That month straight dropped. Previous week high been taken out already. Previous week low's been taken out. So it's like a 50-50 right now, honestly. Damn. It seems like we're gonna form a fair value up here in like 3 hours maybe. If we come back down a little bit, make a little gap, we come back up. I mean down. We come back a little up, then we come back down. It's like I see it's like forming a fair value up here like this. This candle comes down a little bit further and we just close like right there or something. Or if we close up a little bit more above, then that's cool. Cool with me. I see it's just something like that, you know, something going on like that. I'll be watching to see that. Seems like we did form a breaker too though, this high. So, you know, if we hold above like in this area, then of course, you know, I just see us going higher eventually. I would say this is low resistance. All this right here kind of is it is low resistance, I won't lie. So it just looks clear market maker buy model here forming on these. I wouldn't even use this wick for sure, but it's clear. Continuing up maybe. So I would be very cautious trading these though for sure. But this one 4 hour looks like a market maker sell model. I just want to see how we tap into equilibrium if we come back down eventually. I just want to see how we push price higher or if we reject it and continue lower for sure. Something I'll be watching on these. Just seeing how we're going into like later the week for these JPY pairs. We already took these lows out. Little internal market maker model complete, but be targeting this internal resistance liquidity. This buy side imbalance basically. This internal to external. So my external level. If we make this inverse, of course, these lows, and if we rally up, respect it, these highs. So pretty much simple for GPB JPY. We already swept the previous month high as soon as we open up on the next month candle. Wait, when was? So no, yeah, I did classify it as that. I guess you can say. I guess you can say this is like the new day right here. If you use midnight though, then of course it wasn't taken out yet. So it really depends on how you. Yeah, what time you use the candles, I guess. Let's go look at gold. Gold is something I've been watching. Let's take off this Doge. I'm gonna do my crypto analysis later. Gold, my friend. Gold has been one of those months where it's just very volatile, honestly. We came back down to the buy side imbalance here on the monthly. We push higher. Respected. Kind of anticipated. I would have wanted to see those lows get taken out right here. These lows. That's kind of something I was waiting for. Never got that though. And that's kind of why I didn't want to go long yet until we take out this liquidity. But I guess this order block right here was the means to push price higher. And just formed a little market maker model there to buy. Daily time frame, we have this buy side imbalance here. We took out this high already. Taking out more highs. Honestly, it just seems like we're just gonna continue up. But now we're just coming back down. I think we had a 4 hour inversion. I was watching this last night. This would be your 4 hour inversion to push price lower and then target these lows for right now. Your little external resistance on the 4 hour. We get another 4 hour confluence with this inversion. So it looks clear to me, you know. Push price lower or we come back up. Push price lower. Even then, I don't even think we're gonna come back up if we genuinely want to continue lower. I just don't see us coming back up, especially after completing this right here. Or you know, if we complete it, I want to see a closure for sure. You know, if we do come back up, the SIBI got to get disrespected. And we gotta continue up. You know, we gotta make this SIBI an inverse and just continue rallying. But if we do respect it, then of course I see this become like a market structure shift. Especially I want to see these lows get closed through both of these right here. And then start targeting all this right here, all this high resistance liquidity. This is like a big wick from news. I'm just gonna be watching that for gold this week. Let's go look at. I was wondering about US 30. So what is that level that I marked out? I think it was this one right here. So that's on the weekly. The monthly, I think we hit. I don't even think we hit a discount yet. No, yeah, we're still yet to hit a discount. So, I mean, if we come back down, I wouldn't mind that, honestly. I wouldn't mind if we come back down for US 30. So that means like the indices have to drop. So I am kind of a little bit more bearish on the indices. It's more like a power 3 form right now. We're gonna make the high, and then eventually we're gonna start having that distribution. Or yeah, we're forming that high or the manipulation phase. Or it could be the accumulation phase right now, and then eventually form a manipulation phase after like probably NFP, and then drop for the distribution after like every other week. It's like the first week of the month. So first week or the second month or the second week. I mean, the first 2 weeks I usually look for either the high or low to be formed. I don't usually like seeing it formed on the third week. Main reason why is because that's like having a weekly profile and you form it on a Wednesday. And that usually doesn't like really. To me, that doesn't seem like you're just following the trend. It feels like more like a reversal type candle. So it's like kind of like this right here. It's like a reversal type candle. Like you form the high on Wednesday and you close right there on a Friday. Like it just seems like it's a reversal. But for like a continuation market, I want to see it like form the high first 2 weeks and then the low the last 2 weeks and then close somewhere, not too far above the low or too below the high. So yeah. That's how I view Power 3 on the monthly. For the weekly, the same thing, I like seeing the continuation the first like 2 days to form the high and then eventually have that reversal. It can be on the Tuesday or Wednesday. And then I just want to see strong distribution during those days too, though. Probably like during the Wednesday, I like seeing the distribution. But if we form the high Wednesday, I'll probably be very cautious because there's probably some news event or it's like looking like a reversal for sure. That's how I view the market. I try to be very good with time, honestly. I try to focus more on time and just like seeing how that forms instead of just the price action lately. That's why I took off the 1 minute. The 1 minute was doing a lot of damage to me. I noticed I was over trading. That's pretty much it, just over trading. Just being impulsive, over trading, taking too many trades. I want to catch like the meat of the move. Like I want to like not swing trade, but I want to be more of a short-term trader. I don't want to swing trade. I don't want to position trade. I don't want to be a scalper either. I want to be just like a short-term trader, I guess. Like being in the market, like taking, of course, like day trading, but like being in positions a little bit longer and holding them for like the meat of the move for like the daily or the 4-hour candles. Intraday trading, yeah, pretty much. I don't want to be scalping though. Scalping, like to me, like you put more risk on and you're more likely to lose if you're scalping. That's how I view it. That's what I noticed. Like commissions will eat you up. Not even that. If you're like a forex trader, probably for futures is a lot better for sure. But for forex, commissions will eat you up. Scalp is mid because you're risking your whole pocket for real. Yeah. Like Niconomics, I don't know who that is. Niconomics, but he sounds like he's part of economic committee for sure. But I just like I don't know. I just prefer not. I just noticed like in my journal, I just don't like scalping as much. It's over trading again, commissions, just risking too much on a trade with a tight stop. It's not ideal. I'd rather just be more of a intraday trader, like on the 15 and the 5 minute or the 3 minute. Just holding trades for a good run to my objective. And I just need to be better on the higher time frame, like following the higher time frame. That's kind of why I've been trying to just distance myself from that, especially especially on these lower time frames. It's just those lower time frames do damage to me. I mean, price is fractal, of course, guys. So if you're good on the 1 minute, you're a good scalper. Just do what works for you, you know? Don't let nobody else tell you what works and what doesn't. You know, everybody's different, I think. It's really just personal preference too, you know, that kicks in. It's more personal preference at the end of the day. If you're more of a position trader, a scalper, a swing trader, intraday trader, you know, these are all factors they have to consider of what type of trader you want to be. Everybody's different, you know. Nobody will, you know, tell you what to trade, how to trade, what trader to be, you know. It's really all just personal preference and how you determine that. So it's very important, you know, you really do a little. I think that's why it's very important to journal too and reflect. I've just been reflecting all week because I've been sick and I haven't been trading. I've just been reflecting. I've been looking at the trades. I'm like, damn, bro, I took too many trades on this day. Oh yeah, I took too many trades. I fixed, you know, I was looking at the fix and then the mistakes. Just getting really impulsive, sticking to that 1 minute, not zooming out. That's kind of how I got rid of the second chart too. That's why I don't even have the second chart here. It's because I wouldn't even do a top down. I would, but I wouldn't pay attention to the candles like as much because I'll have that weekly chart right here. That weekly chart would be like my directional premise. Like if we're bearish, I will just continue to shorten. But then some days I wouldn't even follow it. I'll be going against the trend or the weekly order flow, and it just wouldn't be ideal for me, you know. So I was like, you know what? Put your focus to one chart. I think, yeah, this is another thing, you know, focusing on one chart and having that multi-time frame analysis is very important. Very, very important because you really focus. I just noticed you really focus a lot more if you have one chart open opposed to like having like multiple and you're just watching multiple. I guess those help you too, but like I just prefer, I don't know, just me, personal preference, I guess. It's just my observation, of course. I focus a lot better on one chart. I don't know, it's weird. It's very weird, especially with my phone too, you know. I notice sometimes like when I take trades on my phone or not even on my computer, I do top down on my phone and I do really well and I take a really good trade. See, I'm just watching this bounce price range. Oh, another thing why I don't drop to the 5 minutes because of market maker X model. I was like always reviewing his charts and I still review them to this day. I just noticed that he doesn't even, majority of the trades he takes, he doesn't drop below the 5 minute. I don't know, it may sound like I'm meat riding or something, but it's just, hold on, Twitty. Okay, hold on. Yeah, I was reading comments on Twitter. But oh, I didn't mean to do that. Let's go look at his his charts right here. So you see he's on the monthly, daily, 1 hour. He takes his this would be more of like a position trade, I guess, or a short term trade. Little swing trade. Here, daily chart, market maker. So I'm out on the hourly and the 5 minute, and he just enters on the 5 minute. 5 minute confluences. Entered off of I think an order block, or was it an order block? I can't see. Yeah, I think it was an order block. He entered off an order block. Very, very key, you know. 15 minutes, 5 minutes, and he just entered on the 5 minute again. Just very clear, you know. I don't know. It's really just a personal preference thing. But you gotta have. I noticed you gotta have a lot of patience though, especially if you're trading on the 5 minute or the 15. I'm not used to that type of patience. That's why I put it up here. Be patient, disciplined, and stoic. Disciplined because, you know, just stick to these time frames. Don't go flipping all the way to the 1 minute, 30-second chart. You know, be disciplined. Do your top down. See if you're in a premium or discount. Find the market maker model you want to find, or that you're in, and then follow the weekly profile, the daily profile, and then just wait for confirmation. That's pretty much it. And use time elements to enter. You know, don't try to enter off of a random time. And then be patient. Let these trades pan out. Let them go. Let them do their thing. You know, don't have be stoic. So don't really care about the price or the P&L. I mean, I'm of course worry about the price action, but I'm just talking about the P&L, really, about being stoic. You know, don't worry about the money, worry about the price action, and then be stoic too. You know, don't have a tight stop. Put your stop at the most recent high or the high, and yeah, that's pretty much it. You know, don't try to be like those Instagram gurus where they'll have like a 5 pip stop, like this right here, like a 1 pip stop. They'll trade like that. Enter the trade there like that, just a really tight stop like that. Get the best risk to reward. You know, let the trade breathe. Even give it a bigger stop sometimes. You know. I don't know though. I like usually just put it at the most recent high. I think that's the best confirmation tool. And if it breaks above that, wait for another smart money reversal, or the trend is changing, or the order flow is changing for the market maker model here, because we are in a discount. You can just see that. Usually discounts tend to be for reversals. So if we get a little market maker buy model, it's a reversal here on this one. So yeah, just put it in screen time. I noticed that I need screen time. That's why I'm streaming, honestly. I've been streaming for a lot more recently, honestly, on these past couple of weeks. I think I've streamed the most this last 2 weeks. For this month, I want to stream like daily, but I already. Oh no, wait, hold on. No, yeah, it's the first. Oh yeah, I guess we started off on a good record. Even though I'm sick, I just still want to stream. That's one of my goals. Streaming for like the rest of the month, especially the weekdays, of course. Not during the weekends, but during the weekdays. For sure. During like the trading days. Even if it's a holiday, I don't give a damn. We're gonna look at some exotics. We're gonna look at some exotic forex pairs. Watch them and trade those, I guess. I think the best one would probably have to be like GPB CAD, maybe. Seeing that market move, since it's kind of like a USD CAD. But we're holding this balanced price range. Any other markets you want me to go over? I'll go over any of these markets right here. Have them all in one time frame. I do have the offer one, but this one's more like for exotic pairs too, though. I guess this one's more organized than this one. This one's just like all bunched up with like different like brokers, I guess, or different servers. The bonds are very cool, because this is like where the Fed pumps their money, usually in bonds. You can use SMT here with these two. You know, bonds usually determine how. Let's put it on SMT. How the dollar is gonna move. That's what I usually use bonds for. Put this on the 30-year. Daily. Yeah, we're just no SMT on these, honestly. Looks clear. Yeah, it seems like there's no SMT, honestly. Just bonds been pumping, bro, for no reason. It's been pumping money into the market, honestly. It's crazy how the Fed is just operating right now. Save. Close without saving. Which market should I? Let's go. I already reviewed AUDST. Let's do. How much time we got left at FOMC? Let's see. So we got 2 o'clock New York time. So we got like 30. Then we got like 15 minutes, honestly. We got 2:30 press conference. So we're gonna just watch how to see. I think the indices. I think we'll probably watch instead of the forex pairs. So yeah. How you get my laptop logged? I think I already read that. Do you have a Discord? I do have a Discord. I don't know if I think I opened it earlier. Yeah. I try to do my analysis on there, but I just tend to forget some days because I haven't been charting though recently. That's why too. But yeah, I think it's in like the video description if you want to join. It's free. We have it's our Discord here. So we have the community. We have the trading chat. We have the indices. If you want to put your charts down in indices, write down what you see, what you want to see, I guess, or what you expect. AUSD. I called this one out for what? What was it? What was the date? Yeah, yes, 2 days ago, I think. Yeah, 2 days ago for a market maker sell model here that formed. I think it was this day right here. Yeah, I was forming this day right here. We never got it completed. These lows right here. I would have wanted to seen that get taken out. I think we did. Yeah, we did. But we came back up before that though, so it wasn't like a fast paced one. It's kind of like more of a retraced and we came down. So, and then crypto, we're looking at. What were we looking at? We're looking at. Oh yeah, ETH, the weekly time frame, the breaker that's forming right now. I want to see us come back down and rally higher for sure on ETH. Bitcoin, I do want to see us respect this monthly sell side imbalance here, and then I don't know. It's kind of hard because we have an inverse here, and then we are forming a buy side imbalance for this monthly candle. So I just want to see how we close here. If we form a buy side imbalance on the monthly, the weekly we already have one down here, so it would be very ideal if we just come down here. Same, but that's kind of why I want ETH to drop to the breaker. Bullish on crypto. I'm not bullish on crypto for right now, honestly, if I'm being completely honest. I just don't see us going up any higher. If we do, that means the bull run has started. That means we're gonna most likely make this right here, the sell side imbalance here, an inverse. Then I'll just probably be going long. If we respect it, of course, we come back down to respect and rally. I'll probably be looking to see these highs get taken out, these highs, and then probably these. Yeah. But I'll probably have to wait for more confirmation. I just kind of see us going down and then eventually rallying. That's kind of what I see for crypto, honestly. But it's pretty hard to determine that because of how volatile it is, you know. There's like no indications behind crypto. So I'm trying to get more into that space for sure. Just getting really good at that. I've been watching the charts a lot more recently on those. And with the Discord too. I get my boy Tusi right here. The ETH King. So yeah, just chilling. That's where I usually mark out my USD CAD trade. Or not CAD, my charting. USD CAD charting didn't work out at all, honestly. Where's USD CAD? It's on the 4 hour, we had that inverse, and I kind of see why. See, look, this chart, oh no, it's right here. It was this one right here. So we made it an inverse, then we dropped, we rallied higher, pushing it. So honestly, on CAD, I think we're just targeting the external level of liquidity. We already took this one out too, you know. I just see us taking out this one, so it just seems like we're just rallying to form a market maker buy model. I mean, a market maker sell model. Eventually, I have to probably take this out. If we continue higher though, probably the monthly rejection blocks. These up here, these probably would have to be my targets. This monthly rejection block, and then probably the consequent encroachment, and then the high. So yeah, I got a bunch of levels to see, you know, if we start breaking lower for sure. But yeah, no, the inverse never held. Push price higher. I guess you kind of could have expected that. It's just, this is probably the problem I get a lot. Eventually on the lower time frames, on the 1 minute, where I'll try to catch the smart money reversal like this, and I'll get faked out and I'll lose. So that's kind of why I got rid of the 1 minute. Just too many false signals to me. So let's go back and watch the indices, since we're about to get that. The FOMC about to come out soon. FOMC. So I'm gonna just wait for FOMC now. I think it's about to come out like in 10 minutes. So I said I was gonna watch US30. See how the balance pressure. We're gonna watch US30 for a little bit, and then we're gonna go back to the SPX on the other chart. So what do y'all expect? What are y'all expecting for crypto? Crypto maniacs. Look at that, we're pushing. Tres. I think we're gonna push higher. Rate pause. Expected so Powell's speech is the indicator today. You think Powell is more hawkish or dovish? Let's go look at the 7 minutes. Who knows? Take a look at Wall Street Journal. See what they're saying. U.S. blah, 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 blah. U.S. all but stopped spying on Hamas in years after 9/11. The economy's great. Why are Americans in a rotten mood? Blah blah blah. I need some better indication. Federal Reserve meeting today. Two-day monetary policy on Wednesday. Announcement rates due to 2 p.m. Central Bank expected pause rate hiking campaign for the second time in a row as the economy continues to absorb the effects of a higher borrowing cost. So interest rates, I guess, are a little high right now. I think he's gonna make them a little higher. He wants more. He needs more bread. We need more bread in the government. Oh. Fed Chair Powell set to speak hold a press conference at 2:30 p.m. to discuss central bank decision and outlook for the economy. U.S. stocks for most higher ahead from the considered placeholder Fed meeting with the majority of investors anticipating central and bank will announce a pause. If we pause, no more government spending. The government they keep giving out too much money, bro. Too much money. Oh yeah, the 10-year notes dropping. That's what I was looking at. We're looking at the bonds. I was like, damn, that shit's. I didn't even say it. I think I was looking for SMT, but shit, that shit is dropping. I think this is where dollar starts to drop. It's where Dixie starts to have that reversal. Yeah, it's kind of lagging. That's why we're having this. The bonds drop below this right here. We break these lows. We drop below this fair value gap here. I think we're going to be bearish soon. Honestly, that's kind of what I'm seeing. I'm going. I'll be right back. We gotta get those dogs away from us. Us. I think it's the third time. Let's read this real quick though. Let's see. Let's put this more in there. The rising yields was one of the reasons the Federal Reserve Chair Powell. Oh wait, hold on. Let's see. Wait, hold on. Did I finish reading this? I didn't read all that. I skipped it. Okay, I was reading this. Dow and S&P flat mid-morning as investors await. It's 1 hour ago. Wait, is S&P? Are we bullish? I think we're bullish. We're a little bullish, honestly. It's like a market maker sell model though. So I'm trying to get good at fundamentals, but not too good, you know, to the point where I just gotta rely on the news type stuff. I want to be good at both. I think it's good to have an outlook on like what the FOMC is doing, you know, like knowing what they're doing, who they are, seeing what state of the world is in, you know. It's very important, not just for the indices market, but for crypto too, you know. I think it's very good, for any market in general, you know. But Dow and S&P flat mid-morning as investors await the Fed decision. Let me show you the S&P. And then the Dow rose 12 points or 0.04. S&P gained 0.3. Nasdaq Composite rose 0.5. Traders expect the central bank to hold steadily and will be watching for clues on where it will take rates from there. We fully expected the Fed to extend their pause on the rate increases, basically to buy themselves time to hunt for anything that gives them reasons to not hike and eventually cut, said Scott Anderschick. Chief executive of Rex Shares. If data continues to come in stronger than expected, the Fed may be hard pressed to not raise rates in December for early next year, he added. So the Fed got a big job to do. Look at this. This is how Wall Street is trading, bro. That's how they're trading. That's how I need to trade, or what? I'm trading the wrong way, or what's up? Like, chat, is this the wrong way I'm trading, or what? If I want to become a Wall Street trader, I gotta have all those indicators and I gotta have all those markets open, or what? I'm gonna have a stock screener. I need to buy TV and have a stock screener. What am I doing it wrong? Oh, like what's going on? I see why people use indicators now. It's everywhere. It's on the news. It's in Wall Street. They just normalize it, and they tell you that that's the way to trade, I guess. It's all over the internet. So it's kind of hard to avoid it. I can see why. Just look at this. Clear as day. If you're about to get into trading, you look up what trading is, how people trade. The first thing you look at is Wall Street. How are these Wall Street traders that make millions and millions of dollars and that run the market, or that you think to run the market, trade? You see the trade with indicators, multiple markets open, this, that, blah, blah, blah. You know, and so you try to copy their flow, but you're not on their level, bro. You're not with the same level as them, bro. They just got a different flow to it. FOMC started though. I think it just started up. Let's see what they cook up, you know. So yeah, just started up on the chart. 14 o'clock New York time. We rallied up. We're coming down. Let's go look at Dow. Ooh, on the 1 hour inversion fair value. Let's go to the 15. Let's go to the 5 minutes. What's the S&P? S&P ski. And then okay, yeah, I think we already read this. What is this? U.S. markets rose on Wednesday after closing out a third straight month of losses, and then that was done 32 points. Okay, I already read that. Yeah. What else? What else? What else? What else? What else? What else can I read? What else? I think that's this. All this is important, but I need something very important, something that catches my eye. Nothing's catching my eye. Probably this only thing. Treasury notes probably. Let's watch FOMC though. I don't think there is any SMT, is there? I think we broke above these highs. Damn, why is this? Let's make this different. Let's make this there. When did I ever change it? Is it a negative correlation between bonds and indices? I think they're the same. I think bonds are like bad to start dropping, and then indices are about to start rallying. It seems like that's what it seems like to me, honestly. But look at the indices, we're just rallying up. Bonds, we were dropping. Let's see if the bonds are dropping. The bonds are dropping still. Let's go on the daily. Bonds look very look like they're having that smart money reversal, you know, like seems like it's gonna be a little bit more bearish soon this upcoming season. Indices seems like we're having that bullish momentum now. So that's what I'm looking at. That's what I'm watching, honestly. Seeing if we can get those. This that so yeah, I'm just watching this, man. What do y'all think? Y'all think we're gonna? I don't know. It's kind of hard. It's kind of hard to think anything right now, honestly. But we're inside that higher time frame PD array. I'm kind of more bearish on the indices. For bonds, we have that bullish fair value gap. If we hold it, I'm bullish. But if we don't, I'm bearish for sure. I think we're gonna have that smart money reversal, especially for dollar index, since we are like hitting a premium. But it's like this new month just opened up, so I'm just trying to be a little bit more lenient to see what that first week prints, since it is like during the half of the first. It's like midweek, honestly. That's when the new candle starts, so it's kind of like it's kind of sketch. I usually like starting them like after the weekend. So yeah. Clean the highs, then market structure shift lower. You think so? So you think like a little breaker form? We clean these highs, we form a little break, and we close, and we come up a little bit, and then we drop further. I kind of see that happening too. Yeah, I am a little bearish too, so I can see that happening for sure. So bearish on, yeah, me too. Until we reach that equilibrium in the monthly daily range, then I'll kind of be more lenient. But as of right now, I'm still bearish. I just want to see how that monthly candle prints and this weekly candle too. That's what I'm more lenient on. I feel like this is what high of week Wednesday. So yeah, I think we make the high of week Wednesday, then we start dropping after this. But I want to confirm it for sure with a drop. So that's what I'm waiting for. And if we don't get that, I was wrong, man. I was wrong. I gotta flip it up. Let's go NQ. NQ looks the same, man. NQ never took out the high right now. Both of them. This one took out the high. Yeah, they both took out the high. Look at Euro. Euro. Ooh, wee. Yeah, it means dollars dropping. These are going up for sure. Let's see if we pump up a little bit more. There's like a little market maker buy model here forming on these right now. So I want to see if we just keep pumping up, baby. Keep pumping up. That's going to confirm my bearishness for Dixie, but I don't even think Dixie's going to get bearish anytime soon. I think we're just going to continue to rally on Dixie. Probably until we have some like big displacement. Then I'll probably be bearish, but I don't think we're going to get that anytime soon. But I'm bearish on the indices. Right now, I feel like we're just filling in those orders. The algorithm is just chilling right now, waiting for that 430. It's like the 14 o'clock, the FOMC statement already came out. They're just waiting for the 14:30 for the other news to come out at this point, I think. Just waiting for the 2:30, I mean. 14:30, yeah, same shit. What you want? Shh, hey, calm down. Why you mad? Shh. My dog is going crazy on me, man. I don't know what's been going on. She's biting me, like she's doing all these things to eat me. Like they're just becoming aggressive for no reason. Shh, calm down. I already gave you food. I already gave you everything. Give you snacks. I already took you outside. What else you need? I already gave you water. I'll probably be watching the consequent encroachment. The .25 we got respected though here. That is clean price action for lower prices if we hold. Still got what, 20 minutes? Yeah. So we got 20. Oh, yeah, now we're dropping. So I'll probably market structure shift. I'll probably use these lows. And then I'll probably want to see a little retracement and then drop further. Probably won't trade any of this. I'm not trading this week, honestly. I just can't, bro. I'm just too sick. I don't even like trading when I'm sick. Like, I think it's the worst time to trade, honestly, when you're sick. That or like whenever you're going through some shit. That's probably the actual worst, probably. Because your emotions are like spiked up. When you're sick, it's like second. When you're like going through some shit, like some grief or a breakup or I don't know, something else maybe. I'm probably forgetting. That's when you don't want to trade. You want to stay away from them charts because you can do damage, boy. You can do damage. You don't even know it. But being sick too, like you're just not at the best state of mind. Not even that, like physically too, like you feel like shit. So it wouldn't be ideal for anything, honestly. Probably just recovery and then at most tape reading for sure. Just still getting in that work in, I think tape reading is not really just tape reading. Watching the price action chart is very underrated. Very slept on. I think that's one of the best ways to get your trading all the way up. Do you stream? I try to stream every day. That's one of my goals for this month. Since we, damn, I wasn't even thinking about streaming today, but I just woke up a little late. I was like, man, let's stream today. I don't feel like reading today. Honestly, bro, like when I'm reading while I'm sick and shit, it's just not it. Like the runny nose be kicking in, be coughing every second. Like it's not worth reading, honestly, when you're sick. You get distracted, honestly, from little things. That's one of my goals. Streaming every day probably for the rest of the year. During the weekdays, of course. But I've been missing. I missed like what these 2 past days. But probably for this month, I'll try to stream every day. If some shit goes down, though, I probably won't. I'll probably alert it in the community tab like I did. But I try to stream every day. Just watching price action. Probably for the AM session. Today's kind of like a PM session day. So, like, if there's like a PM session news, like FOMC, then of course, I'll stream PM session. But I like usually just AM session, especially for Forex and then indices too. PM session, like, not too much volume. It kind of dies down. Unless, like, you have FOMC like this. Shh. She's going crazy on me, man. She's big crazy. She big crazy. There, leave me alone now. Leave me alone, please. 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 Please leave me alone. I'm coughing too, but still waiting on the chance for the big man to speak. Facts. Where can you watch his speech? I've seen it. Go look it up. Ah, right here. 2:30. All right, I'll wait for 2:30. Let's see what he says. I feel like he's gonna affect the market right before it closes. Papa Pow. Papa Pow gotta speak some facts. I'm more bearish. S&P gotta drop 500 points right now. Boom. Or he gotta be like, gold gotta drop. Gold is forming the market maker sell model. Let it drop now. And it drops. Usually, like, they're not even speaking regular terms, if I'm being completely honest. Like, majority of the time I hear FOMC members speak, or like I see their text, like, about their speech. They're usually not even speaking. They're like speaking the economic language, like the PhD level of economics. You gotta understand it, or else you're not gonna know what a damn word they're talking about during that sentence. So you gotta at least know some knowledge about what they're talking about, like the, what the committee does and how they operate. What? What? What is it you want? You're gonna ruin the stream. You're gonna keep barking and their headphones are gonna get blown out. Yeah, the code? Hell yeah, the code. That's a code language, bro. They just can't let you know what they're talking about. I think that's lit though. It's like all the uneducated people that don't know what the fuck they're saying. That's good. Stay uneducated. But if you do know what they're saying, that's even better. You know what they're doing, what they're talking about, what they plan on doing. So yeah. There's a lot of news this week too, though. That's why I didn't even plan on trading this week. Not even just being sick, but I was trying to be cautious. I probably would have traded Tuesday, Monday. Those were the days that it hit me the worst. So I was like, yeah, I'm not. Just entered a euro short, and I got out right instantly, bro. I was like, hell no. I'm not gonna last. For me, ICT is a code. ICT is like he's like the king of the code. He doesn't like being classified as that, so he's very humble. I respect that. If I was in his position, bro, I wouldn't lie. I would probably be very, very unhumble. But he does get mad sometimes, you know. So, you know, he's human, so I see that. But it's like next level shit, bro. Like if you created concepts like that, you're the founder. I would be on rampage mode, bro. Like straight rampage. But he is old. He's getting, you know, he's old. He's mature, you know. So, but sometimes, you know, he can act a little bit young. I think that's normal, bro. Like he's human. He's imperfect. And yeah, no, he's the founder, but like, what do you expect? If I was a founder, bro, I'll be like, I'll be juiced up with power, bro. How I'll have a power ego for sure. And nobody will be able to control it. And it'll be pretty hard to stop me. What do you want? Alright guys, I'm fully back. I'm fully locked in now. No more dog distractions. No more me eating my food. Not looking at the market here. Let me clean my hands real quick. Let me just... Oh yeah, let me take my little supplements. Taking supplements has been a game changer, honestly. I'm not gonna lie, bro. I never thought I would need supplements and shit. I thought I was like a strong, gifted, God-gifted man until I discovered supplements and shit. I realized, you know, what I was lacking. Honestly, game changer. Take supplements if you need them, or if you're lacking something in your life and you know you need supplements, like for a certain area of your life. It could be energy, it could be your sleeping, whatever, you know. It could be your testosterone levels, whatever. Let's see, what is this here? Okay, this one's not even damn near the fucking... Oh my goodness. What do you want? What is it that you want from me? What is it? Let me pick you up and pet you real quick. For what? For what? Oh, the supplement? This is just some ashwagandha. That's really it. And then I probably have to go see, but it's mainly just like ashwagandha and then some other stuff, I guess, in there for like some blood flow. I think I have it in my notes. Let's see. It was like Algerine. No, it's like Tony Geek Ali, something like that. So yeah, some ashwagandha, some Tony Geek Ali, some vitamin D2, all that good shit. Take all that. Juice yourself up, bro. Like, juice yourself up to the point where you're juiced up. Like, you're just juiced up, bro. Like you're like, you were like a chihuahua and then you become a pit bull type stuff. That's what happens when you take it, bro. Like, you just get juiced up. Shh. So look at this. Look at that. Oh yeah, we're bumping up. Let's see if there's SMT here. Oh yeah, look at that one right there. Look at that one. Oh yeah, we're gonna come back up and drop further probably. Oh, look at that. Look at that. Dollar's very bullish. Dollar very, very bullish, boy. Let me tell you that, boy. Back in my day, when it was 1979, dollar was very bullish, boy. But that dollar was very bullish. There was no bricks, there was no CBDCs, there was no Bitcoin, no none of that, boy. Dollar was the strongest it ever been back then, boy. Let me tell you that. When I was on the dollar back then, boy, oh boy, I could buy it. And then I went in when I had like $100. Back in 1969. Oh man, the baby boomers were going off. Me and the baby boomers, oh man, your Uncle Rick, oh yeah, boy, spending all our money on everything we wanted. A bunch of arcades, beautiful women at the arcades, type stuff. That's what they was on back then, bro. Right, that's what they was on back then, right? Crazy how they was living back then. No phones, they was riding their bikes to school. Nowadays, we finna get flying cars soon. I want a Cybertruck, bro. That's what I want. Like, I need a Cybertruck. Like, Elon needs to release it soon, bro. I think, like, driving in a Cybertruck, like, that shit is crazy. Like, that's the future for sure. A Cybertruck. Like, if you see everybody driving Cybertrucks, bro, like, that's how that you know everything's on lit. Nah, but we're still respecting that 25 quadrant right there. I want to see if we hit consequent encroachment this week. I feel like we did form a little breaker since we did close above that the body of that candle right there. This one right here. Hold on, let me show you. My dog's gonna start barking at me. But let me show y'all real quick. So, this low right here got taken out. This high, we broke above it. So, I want to see if we come down, use it as a means to push price higher. Bro, my dog is crazy. What is she want? Like, I don't know what's going in. Like, once we can get into these dogs, bro. It's our neighbor's dogs. Not my dog. Like, I don't know what's going on, bro. Like, them shit's been going down. They've been putting something in the food. The fact that we're trading 1920 with only information, yeah, they'll probably. That's how ICT became ICT, bro. 1990s ICT was created. He became the GOAT. He became the founder of ICT concepts. With only paper charts, or he'll print the charts out. Mark his levels out, see what's going on, view the market trade. Crazy, bro. Like, not even have technology. Like, he was doing it before even the technology was founded. Before even Bill Gates came out with the technology. Or Steve Jobs. Crazy, bro. Yeah, I gotta scare her for a little bit. Calm her down. Put a little fear, that's it. Let's see CAD. CAD is... Oh, wait, hold on. That's the wrong one. CAD. Let's see CAD. I'm tired of this Zen Garden music, bro. That shit just ringing a bell every second. I'm just forgetting what I was thinking about. Let's go to the 5 minute. Let's zoom in a little bit. So we still got what, 3 minutes? I'm gonna wait for that 3 minutes to see the speech. Then I'm gonna watch the speech and watch the market at the same time. See what happens. I just feel so relaxed right now. I feel laid back, bro. I think this is kind of why I like being sick. Some days I don't. Some days I do, because I feel like I just feel so chill, so laid back, bro. Let me go open my Discord to see what's going on with the Discord. Let's see. The welcome Anv joined. Busta XD joined. Poseidon X joined. Adam joined a while ago, so thank you for joining, guys. Thank you, Adam. You're in the chat, I know. If you post your charts on results, indices, or like anywhere there, like, yeah, the crypto, anywhere in there, and like you post your charts, I'll make you a certified trader role. I need to work on the Discord a lot more. I want to make it like more of a... I want to make it the best community possible out there for traders. The ones that have already know how to trade, you know, of course. If you're still learning, I think I don't know if I want to make it like more of a learning. Nah, I don't want to make it a learning. I want to make it more like where everybody just puts their thoughts down about what they think the market is good at doing, like their insight, I guess, the market analysis. Traders that already experienced and stuff, and like just elaborate on ideas. But then sometimes that's detrimental, you know, because if you want the market to do one thing and it doesn't, and or someone saying something about your analysis can be detrimental, you know. It can make you lose your gut feeling that you got. So look at Dixie. Dixie's hitting that 1 hour sell side of balance, right? Yeah. It's juiced up right now. Took out all that buy set right here. Dived up into it, dropped, rallied up. I want to see this become inverse for sure. What is low week Wednesday? Yeah, for sure, bro. Like, I need to see this continue up. Going into Thursday too, you know. Probably Thursday will probably continue to go up for sure. I want to see these highs get taken out for sure. Make that inverse soon, baby. Make that inverse soon. I'll be waiting for that. When did you start streaming? Let's go look. Let's go look at the channel. So, look at that. Who is this guy? Paladin. Paladin, one of the best SMC traders. View your channel. Let's go right to your live streams. I was streaming 2 months ago. Look at my 2 months ago stream. I don't know how to look at that. I was just forcing 1 minute trades. Let's see what else. I feel like my stream's gonna lag if I'm watching this. That just forcing trades every second, bro. Every second I was forcing a trade. I won't even lie to you. No, I'm just playing. Not every second, but like every other opportunity I would see. I used to stream on Facecam. I stopped streaming on Facecam because I don't know. I just prefer not to stream with Facecam. I'd rather let you focus on the price action than me, you know. Like, focus on the chart. Don't focus on me. And then, yeah, nah. Because I'll be picking my nose while I'm streaming. No, I'm just joking. Some days I will, you know. Like right now, I probably would. Since I'm a little sick, but no, it's been like 2 months now. But I stopped streaming. Let me see, actually. I stopped streaming probably, like, for what? I streamed for like a week, then I stopped. Let's see. What was this, like 1, 2, 3, 4, five days in a row. Probably like a week I streamed and that's it. Then it's been 1, 2, 3, 4, 5, 6, 7, 7, 8, 9, 10, 11. 11 streams so far on this past 2 weeks. More of a consistent basis. I've been streaming more and just getting better. I think streaming is like underrated. If you're trying to get really good at trading, streaming is probably one of the best ways. Just get that screen time, get that experience in. So we're breaking above that. I want to see if NQ takes this high out and then we start dropping, or if we break above it and continue up. Probably see ES catch up. ES catch up later on. GPV USD seems to be a little bit further inside the sell side imbalance here than Euro USD for sure. So I'm gonna be watching that too. I want to see if we come back down, use it as an inversion. Probably for ES though. ES is a lot cleaner right now. But yeah, I started streaming a while ago. I think streaming has improved me a lot because I focus more on the charts, talk to people. I keep myself occupied. I don't go on my phone as much. What else? Yeah, I'm really locked in when I'm streaming, honestly. There's like not a single time where I'm not locked in. Clear market maker buy model, we're about to complete it on this one. So I think we're having that speech now. Let's see.
Increase in the supply of workers. The labor force participation rate has moved up since late last year, particularly for individuals aged 25 to 54 years. And immigration has rebounded to pre-pandemic levels. Nominal wage growth has shown some signs of easing, and job vacancies have declined so far this year. Although the jobs to workers gap has narrowed, labor demand still exceeds the supply of available workers. Inflation remains well above our longer run goal of 2%. Total PCE prices rose 3.4% over the 12 months ending in September. Excluding the volatile food and energy categories, core PCE prices rose 3.7%. Inflation has moderated since the middle of last year, and readings over the summer were quite favorable. But a few months of good data are only the beginning of what it will take to build confidence that inflation is moving down sustainably toward our goal. The process of getting inflation sustainably down to 2% has a long way to go. Despite elevated inflation, longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasts.
Bullish, we're bullish.
As well as measures from financial markets. The Fed's monetary policy actions are guided by our mandate to promote maximum employment and stable prices for the American people. My colleagues and I are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. We are highly attentive to the risks that high inflation poses to both sides of our mandate, and we are strongly committed to returning inflation to our 2% objective. As I noted earlier, since early last year, we have raised our policy rate by 5.25 percentage points, and we have decreased our securities holdings by more than $1 trillion. Our restrictive stance of monetary policy is putting downward pressure on economic activity and inflation. The committee decided at today's meeting to maintain the target range for the federal funds rate at 5.25 to 5.5%, and to continue the process of significantly reducing our securities holdings. We are committed to achieving a stance of monetary policy that is sufficiently restrictive to bring inflation sustainably down to 2% over time, and to keeping policy restrictive until we are confident that inflation is on a path to that objective. We are attentive to recent data showing the resilience of economic growth and demand for labor. Evidence of growth persistently above potential, or that tightness in the labor market is no longer easing, could put further progress on inflation at risk and could warrant further tightening of monetary policy. Financial conditions have tightened significantly in recent months, driven by higher, longer-term bond yields, among other factors. Because persistent changes in financial conditions can have implications for the path of monetary policy, we monitor financial developments closely. In light of the uncertainties and risks and how far we have come,
Yes,
the
SMT.
committee is
Waiting
proceeding
for a market structure shift. Let's see.
We will continue to make our decisions meeting by meeting
Oh yeah, it's
based on
clear,
the
clear,
totality of
clear.
the incoming data and their implications for
I want
the
to
outlook
see.
and for economic activity and inflation, as well as the balance.
You think
of
we're gonna
risk.
continue? Wait, you're bearish?
In determining the extent of additional policy firming that may be
I
appropriate
don't know, bro.
to
This
return
is kind of
inflation
scary.
to 2% over time, the committee will take into account the cumulative tightening of
Scary to
monetary
me.
policy,
Damn it, I closed
the
it. What is
lags
this?
with which monetary policy affects economic activity and inflation, and economic and financial developments.
Scary.
We remain committed to bringing inflation back
scary.
down to our 2% goal and to keeping longer-term inflation expectations well anchored. Reducing inflation is likely to require a period of below potential growth and some softening of labor market conditions. Restoring price stability is essential to set the stage for achieving maximum employment and stable prices over the longer run. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you, and I look forward to your questions.
Howard Schneider with Reuters. Thank you, Chair Powell, for doing this. To what you referenced the rise in long-term bond yields, to what degree did that supplant action by the Fed at this meeting?
Thanks for your question. So, I'll talk about bond yields, but I want to take a second and just sort of set the broader context in which we're looking at that. So, if you look at the situation, let's look at the economy first. Inflation has been coming down, but it's still running well above our 2% target. The labor market has been rebalancing, but it's still very tight by many measures. GDP growth has been strong, although many forecasters are forecasting, and they have been forecasting.
Oh, we're getting
that it will
bearish.
slow.
Maybe you're right. Maybe SMT.
We are committed to
Market structure shift here.
of monetary policy that is sufficiently restrictive to bring inflation down to 2% over time. And we're not confident yet that we have achieved such a stance. So that is the broader context into which the strong economy and all the things I said, that's the context in which we're looking at this question of rates. So obviously we're monitoring, we're attentive to the increase in longer term yields, and which have contributed to a tightening of broader financial conditions since the summer. As I mentioned, persistent changes in broader financial conditions can have implications for the path of monetary policy. In this case, the tighter financial conditions we're seeing from higher long-term rates, but also from other sources like the stronger dollar and lower equity prices could matter for future rate decisions as long as two conditions are satisfied. The first is that the tighter conditions would need to be persistent, and that is something that remains to be seen. But that's critical. Things are fluctuating back and forth. That's not what we're looking for. With financial conditions, we're looking for persistent changes that are material. The second thing is that the longer-term rates that have moved up, they can't simply be a reflection of expected policy moves from us. That we would then, that if we didn't follow through on them, then the rates would come back down. So, and I would say on that, it does not appear that an expectation of higher near-term policy rates is causing the increase in longer-term rates. So, in the meantime, though, perhaps the most important thing is that these higher Treasury yields are showing through to higher borrowing costs for households and businesses, and those higher costs are going to weigh on economic
Oh yeah, we're
activity
dropping.
to the extent this tightening persists. And
Still
the
bearish.
mind's eye goes to the 8%, near 8% mortgage rate, which could have pretty significant effect on housing. So that's how I would answer your question.
Just as a quick follow-on to be clear on this, in your opening statement and just now, you seem to have
Want an entry?
not yet confident that financial conditions are restrictive enough to finish the fight. Is that true?
Yes, that's exactly right. To say it a different way, we haven't made any decisions about future meetings.
Already gone? You already took it?
We have not made a determination. And
That's
we're
good,
not,
brother.
I will
That's
say that
good.
We're not confident at this time that we've reached such a stance. We're not confident that we haven't, but we're not confident that we have. And that is the way we're going to be going into these future meetings, is to be, just determining the extent of any additional further policy tightening that may be appropriate to return inflation to 2% over time.
Hi, Chair Powell. Thank you so much for taking our questions. I wonder, if you don't raise interest rates in December, would the presumption be that at that point that we should expect that rates are at their peak, or is there a possibility of restarting rate increases next year? And are there any costs to taking a more extended pause?
So let me start by saying we haven't made a decision about September. You're asking a hypothetical there, but we're going into the December meeting. We'll get, as you know, 2 more inflation readings, 2 more labor market readings, some data on economic activity, and so we'll be taking, and also the broader situation, the broader financial conditions situation, and the broader world situation. We'll be looking at all those things as we make a decision in December. We haven't made that decision. I would say, though, that the idea that the idea that you would be difficult to raise again after stopping for a meeting or two.
Show 1 minute.
Right. And a committee will always do what it thinks is appropriate at the time. And again, we haven't made any decisions at all about December. We didn't talk about making a decision in December today. Really, it was a decision for this meeting and understanding broader things.
Nick Timmeros of the Wall Street Journal. Chair Powell, did the Fed staff put a recession back into the baseline forecast in the materials for today's meeting? And how much does this tightening in financial conditions substitute for rate hikes if the tightening is persistent? You had said it was worth maybe a quarter point when we had the bank failures in the spring. What is it here on something that's presumably more straightforward and more familiar to simulate?
So I guess I don't want to answer your question about the recession, but the answer is no. I think I have to answer it since we did publicly say in the minutes. You'll know anyway in the minutes. The staff did not put a recession back in. I mean, it would be hard to see how you would do that if you look at the activity we've seen recently, which is not really indicative of a recession in the near term. In terms of about
Futures traded to the fair value at BS1 238.
It's just too early to be doing that, and the main reason is we just don't know how persistent this will be. You can see how volatile it is. Different kinds of news will affect the level of rates. And I think any kind of an estimate that was precise would hang out there.
Oh yeah, right here. It's short of interest
of looking wrong very quickly.
It's a glizzy globber.
I think what we can say is that financial conditions have clearly tightened, and you can see that in the rates that
I'm tired of the 1 minute.
Households and businesses are paying now.
I don't trade 1 minute.
And over time, that will have an effect. We just don't know how persistent it's going to be, and it's tough to try to translate that in a way that I'd be comfortable communicating into how many rate hikes that is.
Damn.
What makes you confident that tighter financial conditions will slow above trend growth when 500 basis points of rate hikes, QT, and a minor banking crisis have not thus far?
Well, that's the way our policy works is, and sometimes it works with lags, of course, which can be long and variable. But ultimately, if you raise raise interest rates, you do see those effects, and you see those effects in the economy now. You see what's happening in the housing market. You're seeing that now. You'll see. If you look at surveys of people, it's not a good time, they think, to buy durable goods of various kinds because rates are so high now. I mentioned again, we're getting reports from housing that the effects of this could be quite significant. But you're right. This has been a resilient economy, and it's, I think, been surprising in its resilience. And there are a number of possible reasons why that may be. Our job is to achieve maximum employment and price stability, and so we take the economy as it comes. It has been resilient, so we take it as it is.
Thank you. Colby Smith with the Financial Times. In terms of the thresholds that you've laid out of what could warrant further tightening, the additional evidence of persistently above trend growth or some kind of reversal in the recent easing of labor market tightness, that seems to suggest something more powerful than just one more quarter point rate hike would be necessary. And I'm just curious if that's how the committee sees it.
So we've identified those factors. Those are not meant to be the only factors or a specific test that we're going to be applying with some metrics behind it. Really, we're going to be looking at the broader picture, and what's happening with our progress toward the 2% inflation goal. Is the labor market continuing to broadly cool off and achieve a better balance? We'll be looking at that. Growth. We look at growth insofar as it has implications for our two mandate goals, we look at that. And we look at broader financial conditions. So we'll be looking at all of those things.
If we hold them high below 0.25, I see us dropping for sure. Continuing dropping.
If we do reach that judgment, then
We do respect it though.
policy.
We didn't even tap consequent
Just
encroachment
in
of
terms
that
of
way.
the tightening of financial conditions, if that is having some kind of offsetting,
Is she kind of
effect
bad?
in terms of the need to
Wait, hold on.
potentially
No, wait, I
increase
take that back.
rates, what then is the potential impact on the trajectory of rate cuts? Could we see those maybe
Take that
pulled
back, I'll take that
forward
back, I'll
or
take that
have
back,
to
Chad.
see, more than what the September SEP indicated?
So it's
Could we break even for me?
the fact is the committee is not thinking about rate cuts right now at all. We're not talking about rate cuts. We're still very focused on the first question, which is have we achieved a stance of monetary policy that's sufficiently restrictive to bring inflation down to 2% over time, sustainably? That is the question we're focusing on. The next question, as you know, will be for how long will we remain restrictive? Will policy remain restrictive? And what we said there.
I see us dropping, bro. You probably won't get a break even.
Restrictive until we're
I love it. Oh yeah.
that inflation is on a sustainable path down to 2%. That'll be the next question. But honestly, right now we're really tightly focused on the first question. The question of rates cuts just doesn't come up because I think the first, it's so important to get that first question, as close to right as you can.
Steve Leisman, CNBC. Mr. Chairman, I guess I had assumed that there was a tightening bias in the committee. You say in the statement you're looking to assess the appropriate stance of monetary policy, the extent to which you may need to hike additionally. You didn't say earlier that you were sufficiently restrictive. There were forecasts for 2 rate hikes among most members of the committee. But then you just said that, we haven't made a determination. Would you say the bias right now is neutral, that there is no disposition to hike again, and that the committee largely has moved off of this forecast for 2 hikes? One additional
I
hike
think you're
this
talking
year.
about one additional.
Yeah,
I wouldn't say that at all. I would say, the language, looking at it here, in determining the extent of additional policy firming that may be appropriate to return inflation 2% over time. That's the question we're asking.
So is it right to think of that as a hiking bias is still in the committee here?
We haven't used that term, but it's fair to say that's the question we're asking: is should we hike more? It's not, and that is the question. And you're right that in September we wrote down one additional rate hike, but we'll write down another forecast, as you know, in December.
Thank you, Chris Rugaber at Associated Press. Well, since the last meeting, the auto workers' strike has finished. Oil prices have leveled off. And yet, on the other hand, you have the outbreak of war between Israel and Hamas. How do you see all those factors taken together affecting the economy going forward? How are you thinking about those?
So there are significant issues out there. As you point out, global geopolitical tensions are certainly elevated, and that goes for the war in Ukraine. It goes for the war between Israel and Hamas. We're monitoring that. Our job is to monitor those things for their economic implications.
Damn.
So the UAW strike, as you point out,
Close below 215. Open
appears to
is
be
good.
coming to an end. Oil prices have
215.
flattened
Let's
out. They haven't
see
gone
this
down.
one here.
Prices have gone
Yeah,
down
if
a
we break
little
below
bit
this
from
order
where
block,
we peaked.
if we close it, let's make order block.
Another one is the possibility of government shutdown. We don't know about that one. So there's plenty of risk out there.
I guess that would be a breaker, a false
But
breaker
I
right
would
here.
go back to
I kind of see us
the
using this
bigger
as a
picture
inversion.
From our standpoint is we've got a very strong economy, strong
Yes,
labor
sir.
market.
Yes, sir.
Making progress on the labor market, making
Yes, sir.
progress on inflation,
Yes, sir.
and we're very focused on getting confident that we have achieved a stance of monetary policy that is sufficiently restrictive. That's really our focus.
Damn, this market's crazy, bro. We're just going back and forth.
You, last month had gone to York, Pennsylvania, where you talked to a lot of, last month, where you talked to a lot of small business owners. Just curious, what sentiments did you hear
Pennsylvania.
from them, or what did you picked up on, and was there anything that surprised you the most in terms of what they talked about?
I wouldn't say I was terribly surprised. I was very impressed by York as a town with a real strategy, and I would say it's very impressive what the people there have put together in the face of some difficult longer run trends about offshoring of manufacturing and that kind of thing. They've done a great job as a city, I think. What you hear, and is consistent there, which is people are really suffering under high inflation. You were there.
yeah.
We talked to some people who, were feeling that in their businesses, and other people who were feeling it in their home lives as well. It's painful for people, particularly people who don't have a lot of extra financial resources, who are spending most of their income on the essentials of life. So we know that wasn't new, but that did come through very clearly in the conversations we had in New York. And I walked away from that even, just thinking that we really the best thing we can do for the U.S. is to restore price stability, fully restore price stability, and not fail in that task, and do it as quickly as possible, but also with the least damage we can.
Hi, Chair Powell. Rachel Siegel from the Washington Post. Thanks for taking our questions. You've spoken before about the pain that would likely be coming for the economy
She
in order to
bad.
get inflation
Damn.
down. But since the economy has
I'll
not
take it
responded
back
to rate hikes
from the other
in ways that
girl.
would normally
I'll
be
take her.
expected, have you changed your views on that at all, on how necessary or inevitable that kind of pain would be, say, for the labor market or overall growth?
I'll let her juice me up.
Well, I think
It won me out.
very gratified
Oh, you guys stopped
see
up?
that
Yeah,
we've
no,
been
the
able to
market's
achieve,
it's
pretty
moving back and
significant
forth right now,
progress on
honestly.
inflation without seeing the
It's
kind
going on
of
to 15.
increase in unemployment that has been very typical of rate hiking cycles like this one. So that's a
It's like back and
historically
forth,
unusual
really.
and very welcome result.
Honestly,
And the same is true of growth. We've been saying that we need to see below potential
it's just
growth.
it's like a range bound.
Growth has been
on
strong,
lower
but
time frame.
yet we're still seeing this. I still believe, and my colleagues, for the most part, I think still believe that it is likely to be true. It is still likely to be true, not a certainty.
I want
but
to see
likely
Bitcoin.
that we will need to see
We were juicing it up or
some
what?
slower growth and some softening in the labor market.
We got juiced up earlier. You see that?
To fully restore price stability. So, but it's only a good thing that we haven't seen it, and I think we know why. Since we lifted off, we have understood.
So we haven't broke
really
above
two
that.
processes
I want to
at
see
work.
either level
One
get
of
breaking
which
through
is
right
the
here.
unwinding
I want to see lower
of
prices though for sure.
distortions to both
Especially
supply
on
and
ETH too.
demand from the pandemic
Let's just
and
come down and
response
take
to
out
the
this.
pandemic. And the other is
So I can buy some
restrictive
some
monetary
ETH.
policy, which is moderating demand and giving the supply side
For
time
sure,
to
for
recover,
sure, chat.
time and
For
space to
sure.
recover. So you see those two forces
For
now
sure, for
working together
sure.
to bring down inflation. But it's that first one
Entry 4236
can bring down
ES1.
inflation
4236.
the
Let's go
need
look at
for
it.
higher unemployment
Let's
or
go see
slower
what you
growth.
got
It's
out.
just- It's supply side improvements like
4231.
shortages and bottlenecks and that kind of thing going away. It's getting a
4,
significant increase in the size of the labor
2,
market now, both
3.
from labor force participation
Right
and
here,
from
or you gotta
immigration.
stop that right here.
That's a big supply side,
It's a little
gain
fair value up here in the
that
3
is
minute.
really helping the economy.
kinda
It's
holding.
part of why,
Kind of.
part of why GDP is
But it
so
got
high,
closed
because
up here,
we're
though.
getting that supply. So we welcome that. But I think those things will run their course.
This is like a RDRB.
Probably still gonna
It's
be
a
left
redelivery
with,
balance
I
here.
think, still be left with some ground to cover to get back to full price stability.
For sure.
And
For
that's
sure, for
where
sure.
monetary policy and what we do with demand is still going to be important.
Yes, sir.
Against that backdrop, if you've gotten any clarity on lags, if you have an economy that's been so resilient to high rate increases, does that suggest to you that there isn't necessarily this huge wave of tightening that's still coming through the pipeline and that it may have already come into effect?
I continue to think it's very hard to say. So it's been 1 year at this meeting. 1 year ago, this was the fourth of our 75 basis points hikes. So that's a full year since then. I think we are seeing the effects of all the hiking we did last year, and this year we're seeing it. It's very hard to know exactly what that might be. But you can, for example, an example of where you wouldn't have felt this yet is debt that had been termed out. But it's going to come due and have to get rolled over next year or the year after. So, and there are little things like that where the effects are just taking time to get into the economy. So I think we have to make monetary policy under great uncertainty about how long the lags are. I think trying to get a clear answer and say, I'm just going to assume this is really not a good way to do it. And this is one of the reasons why we have slowed the process down this year, was to give monetary policy.
Yeah, it
time
seems
to
like we're
get into
bullish.
the economy. And it takes time, we know that, and you can't rush it. So
Yes, sir.
slowing down is giving us, I think, a better sense of how much more we need to do if we need to do more.
W man, bro. W man's for Jerome right now,
Mike
bro.
McKee from Bloomberg Television and Radio.
Bloomberg.
I'm trying to connect the dots here. One quick clarification I want to ask about Rachel's question is you said you need slower growth. You had always said before a period of lower than trend growth. Has that changed? And two, it sounds to me like you're basically saying here that the kind of the dot plots out the window, that every meeting is live with the possibility of a rate increase for right now. It doesn't matter about the turn of the year, and that there's not an objective way to determine whether or not you've got enough tightening.
Bro is so locked in. Look at him. He's locked in.
Subjective judgment.
Damn, he is locked in.
Well, so
Oh my
let's talk about the dot
goodness.
plot first. So the dot plot is a picture in time of what the people in the committee thinks is likely to be appropriate monetary policy in light of their own personal economic forecast. In principle, when things change, that's not like a plan that anybody's agreed to or that we will do. That's a forecast that would change. For example, I mean, many things could change that would cause people to say, I wouldn't write down that dot, 6 weeks later. Think of the number of things that could change your mind on that. So I think the efficacy of the dot plot probably decays over the 3-month period between that meeting and the next meeting. But nonetheless, it's out there, and we do personally update our forecast, but we don't formally update the dot plot. So, I think we try to be as transparent as we can about the way we're thinking about these things. We're laying out there our thinking, and as we approach the meeting, we'll all be, my colleagues and I will be talking about how we're processing that data. In terms of, we're not really changing the way, in terms of growth, what I said was below potential. So what you have here recently is growth that is temporarily, potential growth is elevated for a year or two right now over its trend level. So the right way to think about it is what's potential growth this year. People think trend growth over a long period of time is a little bit less than 2%, or I would say just around 2%. But what we've had is with the improvement in the size of the labor force, as I mentioned.
Let's go look at chats.
Participation.
I was just laying back real quick. I was about to go to sleep, honestly, on stream.
The better functioning in the labor market.
On my chart, 4236 is a high of 239. Let's go look at that.
Shortages and those kinds of things. You're seeing actually elevated potential growth. There's catch-up growth that can happen
239.
in potential, and that means that if you could be growing at 2% this year, and still be growing
Right
below
here,
the
it's for sure.
increase in the potential output of the economy. I hope that's clear. That's really what's going on. That's why I would say it as below potential.
But if you could
236.
clarify what I asked about meeting by meeting, are we essentially
Yeah,
down?
you gotta stop that right here, right?
That it's a meeting by meeting, live meeting with a chance of a rate increase that will be decided on
Next FOMC after 3
subjective,
months.
criteria rather than objective. at
The
each
meeting or what?
I don't know that I want to just
Let's
accept
look.
anybody's characterization of it. I'll tell you how we're doing this. So we're going meeting by meeting. We're asking ourselves whether we've achieved a stance of policy that is sufficiently restrictive to bring inflation down to 2% over time. That's the question we're asking. We're looking at the full range of economic data, including financial conditions and all of those things that we look at.
We have the next
And
one December 13th.
We've come very far with this rate hiking cycle.
And that's it,
very
yeah.
far. And you saw the spread at the September
This
meeting.
FOMC meeting
It's a
minutes.
relatively small spread of people think 1 or 2.
And after that's
additional
January
hikes.
31st.
So you're close to the end of the cycle. That was
Next
an impression
one.
as of, I believe, as of September.
Where's the
It's
next
not
one
a
here?
promise or a plan of the future. And
I mean,
we're
we don't
going
even
into
got one in
these meetings
February.
One by one, we're looking at the data.
Look at this
As I
central
mentioned,
bank
we're
rates.
also,
550. Same with New Zealand.
We're being careful. We're proceeding carefully.
G is a little bit
because
lower.
we can
Euro's
proceed
a little
carefully
lower.
at this time. Monetary policy is restrictive. We see its effects, particularly in interest-sensitive spending and other channels. So that's how I think about it.
Thanks. Hi, Chair Powell. Neil Irwin with Axios. In light of the run-up in long-term yields that we've seen the last several weeks, have you given any consideration to the pace of your asset runoff program? And if there were a judgment that the higher term premium was endangering the dual mandate goals, would that be reason to think about slowing or suspending QT, or should we think of that as more of a technical question around reserves?
So, committee is not considering.
I said this
changing
would be a
the pace of
breaker.
Balance sheet runoff. It's not something we're talking about or considering.
come back down. It's kind of like a breaker
and
here.
I know there are many candidate
Push price
explanations
higher.
for why rates have been going up, and QT is certainly on that list. It
He
may
said
be
something
having
about a
a
meeting
relatively small effect,
3
although
months.
I would say at
I didn't
$3.3
catch
trillion
that.
in reserves, it's not. I think it's hard to make a case that reserves are even close to scarce at this point. So that's not something that we're looking at right now.
Hi, Victoria Guido with Politico. I wanted to ask about the Basel III endgame capital proposal. You've gotten a lot of pushback from people on different aspects of the proposal, and you yourself expressed some reservations. And I'm just curious, could you accept finalizing that proposal without significant changes?
So that proposal is out for comment, and we expect a lot of comment. We won't get those comments until the end of, until well into next year. We've extended the deadline, and we'll take them seriously. We'll read them. I'll say what I do expect is that we will come to we're a consensus-driven organization. We'll come to a package that has broad support on the board.
So does broad support mean more support than the proposal had?
It means broad support.
Janelle Marte with Bloomberg. So, in addition to persistence, when you look at long-term treasury yields, what else are you watching to evaluate how those tighter financial conditions are hitting the economy, and if it will lessen the need for further tightening? Also, do you think that those higher yields could affect banking stress?
So what do we look at? We look at a very wide range of financial conditions. And in fact, as you'll know, different organizations publish different financial conditions indexes, which can have 7 or 8 variables, or they can have 100 variables. So there's a very rich environment, and we tend to look at a few of them.
What?
Give you the
Come
names,
to
but
package?
there's
Something
a
like
few
that.
common
Let me
ones
turn
that
it up
people
for you.
look at. And so they're looking at things like the level of the dollar, the level of equity prices, the level of rates, the credit spreads. Sometimes they're pulling in credit availability and things like that. So it isn't any one thing. We would never look at, for example, long-term treasury rates in isolation, nor will we ignore them. But we would look at them as part of a broader picture. And they do play a role, of course, in many of the major standard financial condition indexes. Your second question was banking stress. So it's something we're watching. As you know, we did have there were issues with interest rate risk and also funding uninsured deposits in the things we went through in March and thereafter. And so we've been working a lot with financial institutions to make sure that they have good funding plans and that they have a plan for how to deal with the kind of portfolio unrealized losses that they have. We do think the banking system is quite resilient. We had a handful of bank failures, but so that's what we're out there doing, and we don't have any reason to think that these rate hikes are materially changing that picture, which is one of a strong banking system and one where there's a strong focus by banks and by supervisors on liquidity, on funding, and those sorts of things.
Liquidity, bro.
Thanks, Mr. Chairman. Scott Horsley from NPR. Last week, you and your colleagues put forward a proposal to lower the cap on debit card swipe fees for comment. Could you just talk a little about the considerations there, what it would mean for merchants, for banks, for consumers, and also just what y'all are seeing in terms of the use of both debit and credit cards in the payment system?
So you're right. We put a proposal out for comment is what we did. And this is a job that Congress assigned us, as you of course know, in Dodd-Frank, and all we can really do is faithfully implement the statute. That's all we're trying to do. What else can we really do? It's a 90-day comment period. We typically don't comment on these things once they're out for comment, and we do hope that stakeholders, and we know that they will use this opportunity to express their views. They haven't been shy about that. So that's critical, and that's what I can say about that now.
Thank you. Thanks, Chair. Edward Lawrence with Fox Business. So over the last 3 months, the year-over-year PCE inflation was at 3.4%, core well over 3%. You've said in the past 2% remains the Federal Reserve target, but with no rate increase today, how long would you be okay then with a 3% or 3% plus overall inflation?
You know, the progress is probably going to come in lumps and be bumpy, but we're making progress. You know, I think the core PCE came down by almost 60 basis points in the third quarter. So if you, the best thing I could point you to would be the September SEP, where you know, the expectation was that inflation by the end of next year on a 12-month trailing basis would be well into the twos, and the year after that further into the twos. So that's if you look historically, that's sort of consistent with the way inflation comes down. It does take some time, and as you get as you get further and further from those highs, it may actually take longer time. But the good news is we're making progress, and monetary policy is restrictive, and we feel like we're on a path to make more progress, and it's essential that we do.
Well, you've said in the past that doing too little on interest rates could take years to fix, but the cost of doing too much could be easily fixed. How robust was the debate about this pause on the doing too little side?
That's always the question we're asking ourselves, and we know that if we fail to restore price stability, the risk is that expectations of higher inflation get entrenched in the economy, and we know that that's really bad for people. Inflation will be both higher and more volatile. That's a prescription for misery, and so we're really committed to not letting that happen. You know, for the first year or so of our tightening cycle, the risk was all on the side of not doing enough. We've come far enough that the risks have gotten more two-sided. You can't identify that with a lot of precision, but it does feel like the risks are more two-sided now. But we're committed to getting inflation back down to our target over time, and we will.
Simon Urbinovich with The Economist. Quick follow-up to the question about banking stresses. You talked about how the banking system is resilient. Of course, part of the resilience of the past year stems from the Bank Term Funding Program that you launched in March. Given that bond prices have not recovered, that unrealized losses are probably mounting, how likely is it that you might have to extend that program in March next year?
Good question. We haven't really been thinking about that yet. It's November 1, and that's a decision we'll be making in the first quarter of next year.
Okay. Sorry, quick separate question about inflation expectations. The Michigan Sentiment Survey showed a big jump in 1 year ahead inflation expectations last month from 3.2 to 4.2. Last year, you said that particular survey was a really decisive factor in one of your rate hike decisions. If it stays elevated next time around, how big of an input will that be into your December thinking?
Yeah, we look at a range of things. I think the UM thing got blown out of proportion a little bit. It was actually a preliminary estimate that got revised away, and I said it was preliminary in that, but that didn't get picked up. So we look at many things, and so really look across the broad array of surveys and also market-based estimates, and we do that really carefully at every meeting and between meetings. And it's just clear that inflation expectations are in a good place. The public does believe that inflation will get back down to 2% over time, and it will. They're right. So, and there's no real crack in that armor. You can always find one reading that is a little bit out of whack, but honestly, the bulk of them are just very clear that the public believes that inflation will come down, and that's, of course, we believe that's critical in winning the battle.
Hi, Chair Powell. Megan Casella with Barron's. Thanks for taking our questions. I wanted to see if you could talk about the neutral rate. You mentioned today that you're still debating whether rates are sufficiently restrictive, and you've recently said that evidence is suggesting policy is not too tight right now. So I was curious if you could elaborate on that at all and whether that means the neutral rate, in your view, has risen.
Yeah. So first thing to say is that it's very important. It's a very important variable in the way we think about monetary policy. But you can't identify it with any precision in real time, and we know that. So you have to just take that, you have to take your estimate of it with a grain of salt. What we know now is, within a range of estimates of the neutral rate, policy is restrictive, and it's therefore putting downward pressure on economic activity, hiring, and inflation. So we do talk about this. There's not any debate or attempt to sort of agree as a group on whether R-star has moved or not. Some people think it has. Some people haven't said that don't think it has. Ultimately, it's unknowable, and so really, again, what we're focused on is, looking at the data and giving ourselves a little more time now to look carefully at the data by being careful in our moves. Does it feel like monetary policy is restrictive enough to bring inflation down to 2% over time? That's the question we're asking ourselves. I think, years from now, economists will be revising their estimates of R-star as it existed on November 1, 2023. We can't really wait for that in making policy. We have to we have to have those models and look at them and think about them, but ultimately we've got to look at the effects of that policy's having, accounting for the lags, which makes it difficult.
If I could follow up on a wages point earlier, you talked about the inflation outlook, but I'm curious if you have any concerns whether wage inflation at its current level could risk pushing up overall inflation or reacceleration.
So if you look at the broad range of wages, they have wage increases have really come down significantly over the course of the last 18 months to a level where they're substantially closer to that level that would be consistent with 2% inflation over time, making standard assumptions about productivity over time. So it's much closer than it was. And that's true of the ECI, which is the one that we got this week. It's true of average hourly earnings and compensation per hour too. So, and all of them are kind of saying that, which is great. And you have to look at a group of them because any one of them can be idiosyncratic in any given reading. So that's what you see. And so what you saw with the ECI reading was, if you look back a couple, comes out 4 times a year. If you look back a couple of quarters, you'll see it was much higher, and then it came down substantially in June. And then the September reading was more or less at the same level as the June reading. So in a way, it's just validating that decline. And it was very close to our expectations internally too. So I think we feel good about that. Also, I would say it isn't, in my thinking, it's not the case that wages have been the principal driver of inflation. So far, although I do think it's fair to say that as we go forward, as monetary policy becomes more important relative to the supply side issues I talked about and the unwinding of the pandemic effects, it may be that the labor market becomes more important over time too.
Hi, Nancy Marshall-Genzer with Marketplace. Chair Powell, are you now as concerned about overshooting and raising interest rates too much as you are about getting inflation down to the 2% target?
So as I mentioned, I think for much of the last year and a half, the concern was not doing too much, not doing enough. It was not getting rates high enough in time to avoid having inflation expectations, higher inflation expectations, become entrenched. So that was the concern. I think we've reached now more than 18 months into this. You can see by the fact that we have slowed down, although we're still trying to gain confidence in what the appropriate stance is. But you can see that we think, and I think, that the risks are getting more balanced. I'll just say that they're getting more balanced. The risk of doing too much versus the risk of doing too little are getting more closer to balance, because policy is I think clearly restrictive at 5.25% to 5.5%. That range, if you take off a mainstream estimate of the expected inflation, take 1 year inflation, you're going to see a real policy rate that is well above mainstream estimates of a neutral policy rate. Now that's arithmetic. It doesn't really, what the proof is really in how the economy reacts. But I would say that we're in a place where those risks are getting closer to being in balance.
And you said the proof is how the economy reacts. What are you looking at to be sure you're not overshooting?
Well, I think what we're looking at is, is inflation still broadly cooling? Is it sort of validating the path we saw over the summer, where inflation was clearly cooling and coming down? Now, we've seen periods like that before, and there hasn't been follow through. The data have bounced back. So what are we seeing? You know, are we seeing, is inflation still coming down? So that's the first thing. Second thing is, in the labor market, what we've seen is a very positive rebalancing of supply and demand, partly through just much more supply coming online, and with labor demand still clearly remaining very strong. When you have the kind of job growth we've had over the last quarter, it's still very strong demand. So, and you see wage increases coming down, as we discussed, but coming down, you know, in a kind of gradual way. I think we want to see that whole set of processes continue.
Brian Mena, CNN. Do you think that has been any structural change in either consumption or in the job market that's pushing up consumption? You obviously saw the third quarter GDP figures, which were strong, and some economists have expected revenge spending to have fizzled out by now. So I'm kind of wondering if there's been any structural change in consumption.
I wouldn't say there's been a structural change in consumption. I would say it's certainly been strong. And so a couple of things. We may have underestimated the balance sheet strength of households and small businesses, and that may be part of it. There may be, you know, we've been, like everyone else, trying to estimate the amount of savings that households have from the pandemic when they couldn't spend on services really at all, or you know, in-person services. And you know, there can still be more of that than we think. Although at a certain point we're going to be getting back to pre-pandemic levels of savings. We may not be there yet. So things clearly people are still spending. The dynamic has been really strong job creation, with now wages that are higher than inflation in the aggregate anyway, and that raises real disposable income, and that raises spending, which continues to drive more hiring. And so you've had a really, that whole dynamic has been, and also at the same time, the pandemic effects are wearing off, so that goods availability, automobile availability is better, or was better. I think it still is. And from a business standpoint, there are more people to hire, and there's more labor supply. So the whole thing has led to more growth, more spending, and that kind of thing. And it's been, it's been good. And the thing is, we've been achieving progress on inflation in the middle of this. So it's been a dynamic. The question is, how long can that continue? And I just think the existence of this second set of factors at this time, which is the unwinding of the pandemic effects, that's what makes this cycle unique, I think. And we're still learning.
We're seeing the lag in results.
That took longer for that process to begin than we thought, and we're still learning about how it plays out. That's all we can do.
So to Daniel, for the last question.
Thank you, Chair Powell. Daniel Avis from Agence France-Presse. Just a quick question following up on an earlier one. With regards to the Israel-Hamas conflict, the Fed's financial stability report said the Israel-Hamas conflict and the conflict in Ukraine pose important risks to global economic activity, including the possibility of sustained disruptions to regional trade in food, energy, and other commodities. You've had organizations like the World Bank warning of a possible surge in oil prices if the war spreads to other countries in the region. I'm just wondering how the Fed is monitoring these developments in the Middle East. You mentioned they are, and just what the potential economic impact could be if the conflict does spread to other countries in the region. Thank you.
I wouldn't want to speculate too much, but I'll just say, really the question there is, does the war spread more widely, and does it start to do things like affect oil prices in particular, since this is the Middle East we're talking about?
Oil prices. The
price of oil has really not reacted very much so far to this. As the Fed, as the Federal Open Market Committee, our job is really to talk about, to understand the economy and the economic effects. And it isn't clear at this point that the conflict in the Middle East is on track to have significant economic effects. That doesn't mean it isn't incredibly important and something for people to, to take really important notice of. But it may or may not turn out to be something that matters for the Federal Open Market Committee as an economic body. But what the Financial Stability Report does is it calls out risks, and that's what it's doing, is calling out a risk of that. And the war in Ukraine, the same. War in Ukraine, did have immediately very significant macroeconomic implications because of the connection to commodities. So, thank you.
Commodities.
Thanks very much.
Is that it? That's it. That is hold on, my mic is way too. My mic is loud. I think right there is good enough. Is that okay? Yeah, I think. Hold on. We turn it down a little bit more. Turn this down a little bit more. There. I think that's good enough right here. The event has ended now. I had to turn this off. There. Let's put this right here. Why can I add it in there? I can't add it in here. What is going on? Oh yeah, I forgot. It's 2 different accounts. 15 minutes of nothing. I mean, he said a lot of stuff, but I couldn't even like ingest half of it, bro. That shit was crazy. Us. I couldn't even like. I didn't like. It's like too much, bro. Like too much about everything. It's like you gotta have a notepad and write down everything he talks about. That is what I'm noticing. Next time he speaks, I'm having a notepad and I just saw that on Twitter. I was on Twitter right here. Gosh, that's why I had everything blocked from Unhooked. Everything blocked. Stay focused. I gotta stay focused. But let's go to Brave. Let's go to Twitter. Let's go to notifications and let's look at ICT Mentorship 2023 Market Maker Models. Everybody. That was me right here, bro. That was my honest reaction. That was my honest reaction when I saw that, bro. I was like, what? No freaking way. Look at this data highs. Clear market maker sell model here. Panned out. But this is like the market maker buy model. ETH short. Massive ETH short liquidation at 22. Time to liquidate. That's this guy's position here. I'm good with breaker block concepts. Breaker block. Ramsdale. Turtle soup. E-mini S&P right now. See, that's what I was looking at. So we were just looking at this. I was like, I want to see this come back down to the break. We never came back down. So I guess we had a turtle soup. Let's close this chart here. Open this one right here. I think this one's a lot better. A lot better with the... Did NQ have that turtle soup? We did. If we bought that turtle soup, I bought those in a break block form. So let's go look at GU. GU's just rallying, dollar dropping. Very, very hard. See, you gotta like... Maybe this is where Tuesday low week kicks in though and we start rallying. I don't know. I wanted to see more of a continuation. This one too, Wednesday high week reversal, but it looks like we're just gonna be bullish for the rest of the week. Maybe see some smart retracements and close. I feel it's gonna be a kind of more of a bullish week. I'm trying to be very, very nimble. What else? BTC. What are they saying? It's resistance. I guess it's like kind of would be equilibrium of the range. We're tapping into it, I guess. What is this, man? Who's that? The Ben Shot Patio, whoever his name is. 60 points. 60. Look at this trade right here. Everybody just took this trade right now on PM session. FOMC. Everybody. Why do I keep tapping another chat? Watch out. So let's see, silver bullet fair value gap right here on the 1 minute, and then we had a 30-second inversion fair value gap, sell side swept, buy side swept. So came down, engineered liquidity, daily fair value gap, consequent encroachment, and respected it, and then we rallied higher. Beautiful took the same, except on micros. There's a tiny inversion fair value gap on minute 1, so thankfully Gonna need to switch to the seconds chart low. And let's see what other trades other people have taken. Look at Trump Powell. You got a nice rolly, bro. You got a nice Rolex for sure. No one else took trades right here. Shame I gambled on Casino Land. I learned it on live stream. 1330. This is the fair value gap that girl was talking about. Let's go look at it. So there's a fair value gap on the 1 minute. She said. Where would it be though? I don't see any inversion fair value gap on the 1 minute. She said micros. So let's go look at the MES. I don't see any inversion fair value gap. He spotted the fair value gap on ES. On ES right here. Where's the, am I bugging? Am I bugging? Am I? Bro, there's a fair value gap right here for him. I think. Was it this one? His was respected by the silver bullet hour. Or was it before FOMC? Bro, I think I'm tripping, guys. I don't know. I think I'm seeing stuff. I'm just seeing stuff, bro. Did y'all see a fair value gap inverse? I like it. I don't know, bro. I'm bugging, I think. Crazy day today, honestly. We came down, rallied. So we took out all this liquidity down here. There wasn't no SMT really because both of them took it out really. It seemed like ES was more of like the one that had all the wicks like than NQ. NQ was just a lot more clean. GPB USD, bunch of wicks, back and forth movement. Didn't look good to trade forex, especially during the afternoon. Afternoon during on forex is not as ideal as yeah, it doesn't look ideal honestly. Just look at that back and forth. We started rallying. Look at a little clean market maker buy model here. Same thing with GU, little market maker clean model. Little buy side to the curve here. All this, I mean, sell side to the curve here. Now it's pretty much buy side to the curve. So we're just gonna see that, and we're gonna zoom out a little bit. Look at the other time frames. See what the ES and Q is offering. Where it's going actually. I'm just trying to see where it's gonna go. Where we're likely to head for the rest of the week. Try to see how NFP is gonna pan out too. See the trading chat. Really firms to join our trading clan. I really brother. Trading clan. It's cool. It's good, but community like this is same level as clan for sure. There. I try to sound like Khabib. Let's see. So we already tapped up. I think. Wait, are we above the consequent encroachment? Yeah, mean threshold. We're above it. So we're just gonna have to wait and see, honestly. Again, I do want to see this high get taken out right there, cause it just looks very, very clear, like a market maker sell model here. I mean, buy model that's better be complete. I just see us taking out this high for sure. Probably the previous week high. Come up, tap it up into there, and then we start seeing some retracement, and then make this an inverse. Come back up into here, and probably make this a double inverse. We come back and then drop and take out these lows. It's kind of what I want to see, but it's gonna take a while to print, and you know we're gonna have too much news and too much indications pushing us to see if that's gonna form. Probably it can happen, but you know, there's way too much going on right now for us to really expect anything, honestly. Look at this big gap right here for the news, and then the FOMC here. It's like it's not very ideal to trade today on the forex pairs. Look at CAD. CAD is dropping. USD CAD. That means the dollar's dropping. So dollar swept previous week high. We hit that 1 hour sell side imbalance. That is very good, honestly. Like, it's very precise. Precision at its maximum. And yeah, now we just... Ooh, this one's above 4 hour. What's... 4 hour inversion is above that 4 hour inverse there. That's very good, honestly. Again, just seeing that be probably taken out. Let's look at the Bruce Week guy. Damn, this one's way higher than the other one. That's kind of scary. For sure, this one's scarier. I think we're gonna take this one out soon, for sure. Yeah, it just looks pretty clear. Looks pretty clear, right? Let's go look at these charts. What do you think? Look at these trades he took. Let's not worry about the trades. No, a breaker on the US 4 hour. EU 4 hour breaker, 4 hour. Oh yeah, I see this breaker here, I think. Even when I hear this breaker, little breaker here, we come back, tap up to it with a self. This is like a unicorn model. Very clear. Unicorn, yeah, I see that. Low resistance on the 4 hour, yeah. I think we already swept all that though. Same with you. In Q set of a breaker, 4 hour breaker. This one right here, I can see that, yeah. I feel like you're right. It's probably on the NSC chart. God damn, man. Let me get on these charts right here. It's future charts. Let's see. Let's mark out all this right here. I usually like using the bodies. So yeah, I kind of see this. I can see this dropping for sure. Yeah, I can see this dropping, honestly. Looks very, very clear. 27th of September. 27th of September. 27th of September. This right here? Wait, yeah, Wednesday 27th? This one right here? It's kind of long, I'm not gonna lie. It's kind of a while. But yeah, it is kind of a big breaker to the... That one's been tested multiple times. I'll probably just use the recent one, probably this one right here. I mean, it's like near the same level. Probably a little breaker than like an order block up here, probably. It's like near the same confluences, honestly. It's not too much different. Everybody was taking those FOMC trades. You see that? They were all juiced up and stuff. Let's go watch Dow 30, Dow 30, Dow 30. Yeah, this one had a 1 hour buy center balance. It respected it. I want to see if the indices had that. NQ had it, or SPX had it. Yeah, so SPX followed. Dow had a US institutional inflation right there, boys. We should have spotted that. Turtle soup with a rebalance into an imbalance. And it just came and tapped up into it and dropped. That was beautiful. Beautiful delivery. Honestly, that would have been probably the best trade for the day. We just kept watching Jerome Powell. We just kept, staying glued to what he was saying. If it breaks, then I'm going to be on that side. On the lower side. Yeah, I see that for sure. I want to finish ICT's mentorship to catch up to that market maker model video. I need to get that one, bro. I need to. Like, I'm addicted to market maker models. That's all I trade. If he drops some gems, I'm gonna be able to review it. I'm not trading down the sidelines. Yeah, me too, bro. Probably for the rest of the week. I mean, I already missed majority of the moves, so like, there's no point trying to trade anymore. Look at crypto calendar. Ooh, this is nice. Honestly, I might have to add this one to my thing. This looks nice. Let's filter it out though. Put this like that. Let's see what else. Okay, yeah, that's it. It's just the same as FOMC or regular news. It's the same shit on crypto. It's the same stuff, bruh. It's not even different. It's his last video. I gotta watch that shit, bro. On the 23 mentorship. It's his last vid. He's probably leaving Twitter soon. I've been trading market maker X models for a while, so probably for like, let's go look at my journal. I started trading it like, look, I've been taking notes. I need to take notes how I journal. I usually don't like taking notes like this. I don't know. I just don't. I rather put it like in pages and then take the video there, like put a page episode and then take notes for that episode in that page instead of just doing it like this, all like this. It gets cramped up to me, honestly, and I don't like it. I just prefer not to. But then like this, I kind of like it too. Just go down through it smoothly. Of course. But I'm waiting for this. I think this is what, EP 90, yeah, 95 to probably to like the latest one he got. So I already know what the latest one is. So we're gonna leave it like that. So yeah, just wait. I'm gonna make pages after there. I'll make pages for the episodes. So I'm just gonna do that. That's what we're gonna do. Then we're gonna put the title there. That's how I do my notes like that. I'm tired of just doing it like this. I don't like it. Let's go to 23 charting. Let's go right there. Kind of see market maker X more clean on FX pairs. I really just see it on everything, honestly. Like, there's not a single market or asset I don't see market maker X. I see it on crypto. I see it on everything. Same with the 22 model. I just try to. More of the models I try to trade is more of just the 22 internal resistance to external. That's pretty much it. Just market maker X. Just understanding that is very powerful. It's like 20 minutes to close, so after that I'll probably stop streaming. Probably stream tomorrow early AM. I don't even think we got news, right? AM session tomorrow, right? I'll try to stream early, like before the market even opens. So yeah, we got like what, 8 o'clock and then 8:30. I'll try to be up before. Probably after this comes out, I'll probably try to be streaming by then. I want to stream before like the New York Stock Exchange open. It's like before 9:30, but like around like 9 o'clock probably. So yeah. Mic is like right on my face, right on my lips, bro. I see a market maker sell model here forming on in the sheesh. Oops. Hello, what is going on? Hello, my brother. Hello. This one already swept it. This one hasn't. Clear SMT. Do you see that? Took that one out. This one right here hasn't taken it out. Clear SMT. NQ looks a lot weaker than ES right now, so I see ES dropping further than NQ right now. I'm still looking for shorts. You still looking to trade? I thought you're not trading. I thought you're on sidelines, brother. Don't trade. Don't trade. I'm just playing. If you want to trade, you can trade, bro. I'm not trading. I already told myself I'm not trading this week. I'm gonna look how much I'm down. Let's show y'all. Let's show the chat. Let me be fully transparent. Let me show you guys my funded accounts. So, show you my funded freaking accounts. My Blue Guardian account here. Let's see my Blue Guardian. Let's get rid of this RSI indicator. I'm tired of having it. You feel me? Like you just get tired of these indicators everywhere. Let's go for the week. Look for the week. I was down 2% on the month. Basically, this month we're down 1% on the 10K. You can't. I hate how you can't like you can't filter it. Like you can't show like profit ones and then you can't show like losses. So we start off with a USD cat trade, and then we just started losing SPX, took a big loss in Q. This is when we're trading that OTE model. Same thing with this one, OTE model. Took good wins on Euro. Another loss here. Using OTE model. I was like, all right, I'm done trading that goddamn OTE model. It's more like a mechanical strategy. For me, I don't like using mechanical strategies. I like more discretionary, but I like having rules based, like not even using like the going under like the 3 minute. Good win right here. I remember this is where we used the market maker X models. That's where we started using the market maker X models right here after the 17th. And yeah, you can see we lost a lot during the 17th being in discretionary. Eventually we made it all back, and then probably more. And then I just started risking a lot less and just taking less trades with less leverage. So that's pretty much it. So yeah, it's been a very up and down roller coaster on that 10K account. I've been more scared to put a trade on with a lot of risk, like 1% risk. I've been risking like 0.5 ever since I've been like close to break even. When I was like at 4% though, when I was like 4% drawdown, I was like, I don't know, I was just more crazy. I was like, I don't care if I lose an account here. Let's risk like 1.5, 1%, you know, and we'll win. And it just make me like, damn, we're just getting euphoric off of it, I guess. But after like deep reviewing and then like just like losing like 2% past week, like just being on the drawdown, I guess, again, or on the break even. I just realized the 1 minute was doing too much damage for me. I was just being really impulsive, so looking for shorts. Didn't close above the breaker. Yeah, better price action. Didn't close above that breaker you're looking at right here. 27th of September. Right here on this chart is different than the indices for sure. I would have just used this one right here. I just want to see how the S&P is though, for sure. This one right, this high with that one. This one already took it out. This on the 4 hour though. That's crazy. I want to see S&P on the like. There's no S&P there. I use ES1. Yeah, I don't use ES1. Just because I'm trading on that Forex account there, so I just use the 8-cap broker right here. That the one I'm pretty much in on that funded account there, the 8-cap. But the MT4 charts, they be the same, but the prices are just different. That's kind of the only thing that throws me off. I wish like prices were the same from like that chart to the trading view chart. It just makes me mad. Well, that's why I like futures though, because futures is like one chart, nothing can be skewed. It's all controlled by the CME group. Just prefer that one a lot more. A lot more. I want to get a funded account pass. I want to get like 100K funding soon. I'm craving that, bro. That's all I'm craving. Just craving 100K funding, bro. I'm just starving for it. It's like my mouth waters for it. My mouth is watering for that 100K funding. And then putting it all into crypto futures and then just like blowing my funded accounts money with cryptos. This crypto just looks so juicy right now. It's getting so active right now, bro. It's like, oh, it's like the worst time to be freaking not funded. It's the worst time to not be funded, bro. Because the market is moving. I just feel so much better now. I feel a lot better. You can just feel it when you're getting unsick. You just feel it a lot more and you just feel a lot better. You feel like You're still on, bro? How long have I been on? 3 hours? What the? No way, it's been 3 hours. Bro. No way. Bro, I swear, I feel like it's been like 1 hour. Bro, I swear it's been like 1 hour. Am I bugging? Bro, what? Yeah, I'll just wait till market close to start cooling down and then do analysis, then probably end it there. Probably like in another hour, probably. God damn. I didn't know that. I didn't know I was on for that long. That's lit, though. Let's see. Just joined Discord. I need to learn so much, though. I just noticed you use regular S&P chart. I've always assumed we need fancy indice charts like ES1 and QZ 23 stuff, but need to pay $9 extra for it. Like ES1, I use it sometimes for more of a clean, more clean price action like this right here, ES1, or NQ, just for clean, more clean price action for sure. Again, I kind of use both, but I just use this one more because of my funded accounts. They're on that broker. They're on ACAP broker. They're not on CME, or I'm not on a futures anyways. So it is like pointless for me to trade off of that. So I view this one more for like just like an SMT chart too, though. This one just has more clean price action than the other ones for sure. This one's very, very clean, very smooth price action. I just use these because I'm trading off of them on my MT4 charts. So we ran through that daily sell. I think we ran right through it, bro. I'm gonna use this one now. What's if we hold that one? Come up, take this, and then drop. That's what I want to see. This is inverse now. This order block is gonna be inverse too. Scary, bro. It's just scary how much we're pushing now since Jerome Powell started talking. It's like just a clear market maker buy model here for me. I want to see the high ticket taken out. I've been saying this for a while, man. $5 for more cleaner, precise chart. It is like a monthly thing. Is that wait? Is it like a monthly? Hold on, let's go look. Let's go see. I don't want to chart. Give me one. I hate having like more than one chart, especially like when I'm trying to focus. It's very distracting to me. So zero sign up. But if you want to get paid annually, where can you see explore available markets? Oh, it's $9 now. But I thought you can. Let's see. You can like lower it for sure. US, I expect. So NASDAQ, $5 a month. NASDAQ stock markets, $3 a month stocks. New York Stock Exchange, ARCA stocks, $3 a month for more. New York Stock Exchange indices, stocks rate, $3 a month too. US stock market bundle. I'll probably just get, the bundle's way better for sure. You get everything. It's probably $9. Yeah, it'll be worth it for $9 a month. It's kind of a steal. CME group, yeah, it's probably like $5 a month. For me, it was like $3 a month back then. I trade with FTMO and Funded Next. Would you be okay if I use regular ONDF? Bro, the charts don't mean nothing, honestly. Like this, it's usually just the pricing that is different. The charts are usually majority of the time the same. You'll just have some like volume imbalances on here, like here and there, especially on lower time frames. But just the pricing is different, and like how I guess like how they fluctuate too is different. Like these are like more static. They just don't move as much. They're just very dry. They move up. 5 seconds later they move down. Move up. The other ones they just move a lot more precise. They just move more. Like they're just like. You just see it a lot more. They're just moving. They're fluctuating up and down constantly. You see. Let's pull up the chart here. Let's show. So let's have ES1 right here, and let's have ES right here. What time frame? 5 minute. 5 minute. That's 1 hour. Let's go 5 minute. See, ES1 is moving a lot more quickly. Let's go on the 1 minute. CS moves a lot more. ES1. It is kind of like the same stuff. In terms of price, yeah. Past price action, watch the 1 minute on CFD and futures. Yeah, that's what I'm doing right now. Just look at the futures. It's like real time market though. It's a lot more clean. Just the way it moves. Like moves up and down a lot more smoothly. But I guess it's like they're the same. There's ain't nothing much different, honestly. Just watch it, study, analyze it, see what differences you see, you know, see if it's worth it or not. Did you study all the IC playlists when starting out? Any good roadmap advice for starting out? ICT study. Why's your name ICT study? You haven't even studied ICT. That's my first question. Like, it's not. I'm not trying to be mean or anything. Like, why? Why do you have your name as that if you didn't even study him? Like, I would have thought by your name, like you studied everything already, or like you studied like most of his content. It just caught me off guard. I thought you would have been. I don't know. I feel like you would have been a good like you would have been like mastering this shit already. It's weird to me, but probably like core content is probably the best for me. And then like 22. A lot of people say like don't study too much because it can be like overwhelming, or like the catalog is just too much and like you're not gonna know what to use. I guess that is kind of true because like I would study so much. Like I watched like majority of his playlists. Like at times I wouldn't even know what to use, like what models. Like I guess like I would see the market for, like both sides, and it'll be like hard to actually like give me a clear direction. Even with higher time frame narrative, I'll be like, damn, I don't know, like if the market's gonna move up today or it's gonna go down. You know, like it's like, and you know I was getting lost because there was just like so much you can use, and then so there's just so many PD arrays and concepts low. It's just, you know, yeah, it gets overwhelming, bro. But then I just like narrowed it down. I was like, all right. I was like, all right. I was like reviewing a lot of the Twitter charts I had and like people I would look up to on Twitter, and I was like, you know, I need to make it a lot more simple, you know? Like when trading is complicated, that's usually not a good sign that you're in the right direction. When you have it simple, but like once you make the complicated stuff simple, that's when you know like you're in the right direction. And so I not watch, but like I would just study Market Maker X model, his charts, like his Twitter charts. I noticed, you know, he'll do a top down, he'll find his bias, and he'll use the premium discount from the daily, he'll drop it down to the hourly, find the market maker model on the hourly from the daily, you know, PD array, and then use like a entry model. Like it could be any entry model. Entry models don't matter. Whenever you're using like your market maker X model, you know, you just got to see what phase you're in. Like if you're in the reaccumulation phase for the sell model, or like the buy model, and then or the distribution phase of each one of those models. And then just entry doesn't really matter as long as you know what model you're in, or like what phase you're in for the market maker model. But I just prefer the 22 model. I think liquidity sweep, displacement, and then a reentry at a retracement is probably the best for me. ICT release at market maker X model 30 minutes ago. Yeah, no, I need to catch up and finish it, bro. I need to, you need screen time. Oh yeah, you also need screen time. You can't like, I guess that's another thing too. Yeah, like you can't just learn everything and expect to like go back into the charts and like instantly have all that experience built up just from watching videos. It doesn't work like that. You need screen time. That's why I've been live streaming too a lot. I noticed I needed screen time, and like every time I would not live stream and I'll be watching the charts, I usually get distracted. I don't focus on price action. I'll be doing something else, or just distract myself. Like I wouldn't fully focus. I was like, all right, how can I fully focus while watching price action and not go off and do something else and not build up my screen time? So I was like, all right, I'll live stream. Do you use day quarterly theory indicator every week? There's a new technique low. Nah, I don't use day quarterly theory. I've seen it. I've used it before, but I just don't use it. Like again, I just don't like, having too many strategies or overcomplicating my trading. I just stick with market maker X model and then 22 model for entry. quarter one and quarter four and matching it with the sessions, yeah, it's like AMDX and then XAMD. I just don't use it because I just don't like overcomplicating it. I like keeping it simple, not too complicated. Just not too many strategies. Again, you're just gonna use too much, and you're just gonna get overwhelmed. You're not gonna know what to trade. That's why I decided. I was like, all right, I'm gonna trade market maker X, internal resistance to external or external to internal. As simple as that. I don't try to overcomplicate it. That's why I don't even have the 1 minute as one of my favorites. The 3 minute, I don't even really use it. I just stick with the 5 and the 15. Facts, bro. I'm enjoying the tape reading. Hope you grow from within your Discord. I'm trying to go to the Discord. I think having a community is like one of the best things. I think that not even just like for trading though, like for everything, like e-com, like social media marketing agencies, like having a community for all that is very important. Like where entrepreneurs can gather together. But I want to focus on trading for now, on that, like a trading community. I see the other ones. I see how the other trading community are. Let's go see. See like Dangstrat, his community is very good. It has all this right here. They share all their stuff. It's very, very good. I like his chart layout. It's very lit. But yeah, nah. And then the pickle his charts. Pretty much very good charts. Again, just external to internal. Pretty much what I try to use for market maker X, and then this my community. I'm trying to grow my community a lot more. I'm trying to be a lot more active, especially on the different markets. Not just not it was recently just indices and then forex. I'm trying to bring crypto more in there. Forex. I need to add a Dixie one, dollar index. So I think I'm gonna do that later, because I think everybody has a Dixie chart. Yeah, everybody has a Dixie chart. Commodities too. I don't have commodities. I need to put that in there. I need to put commodities, indices, and then start like labeling it a lot more. Day quarterly theories that advanced simple PDA raise is a good start. ICT, according to ICT NFP protocol, we are supposed to stop trading for today. Yeah. I haven't traded all week, bro. Honestly, I'm not trading. I haven't traded. It's because I'm sick. But if I was, I'll probably stop trading today. Yeah, after today, because tomorrow I feel like probably early AM session. You'll probably find a good trade tomorrow, but that's probably it. After that, nah, you probably won't find a good trade after that, especially after NFP maybe. But even then, like on a Friday, NFP AM sessions like all juiced up already from the NFP. I just won't even trade that. Today will probably have to be like today, or probably tomorrow will probably have to be like tomorrow early morning have to be like the last day I trade if I was to trade. But I'm not trading this week at all. I took €1 short and that's it, and then I exited out like I break even. I entered the first position early, and then I was just like, alright, I'm done. I was just done that whole week, bro. Like from the start of the week, I knew I was like, yeah, I'm fucked. I'm not gonna trade, bro. I'm just way too sick. Now I've been getting a little better, but I still don't want to force my hand in the market because it's not really worth it, You need to learn how price moves from PDA rate to PDA rate on higher time frames. I think that is true. Once you get the higher time frame down, is really just like conquering the lower. That's something I have trouble with, conquering lower. That's why I'm not even trying to go lower than the 3 minute, because I just know something dwells right there that isn't good for me, especially on the 1 minute. It isn't good for me. I just prefer like 5 and 15. I just prefer being more disciplined and patient for those. Since London opens at 4 a.m. Eastern, now does that mean Silver Bullet is now 4 to 5? What was it before? 2 to 3? Take baby whose time the London opens for Yeah, it'll probably have to be 4 to 5 now. Since London started, they stopped. Wait, I think they started daylight savings time, right? I think New York starts. I don't know when they start actually. I think it should be on the calendar here. No, it doesn't. It is not. No events. No events. Tell me the events. No events. Daylight. There ain't shit on here. There's not no news on here. Yeah, we started. That's yeah. Okay. Yeah. So that's yeah. I see why now. So yeah, probably yeah. New silver bullet time for London session. Or you can have the indicator. Where's it? Indicator. You just put S silver bullet and it'll show you. I spelled it wrong. Silver bullets. Let's see. Damn, take these lines off. These damn lines. Targets there. So what was silver bullet at? Where's it at? I can't even see it. Hold on. For London. See London. 3 to 4. Yeah, it's 3 to wait, that's New York. AM. Oh. 3 to 4 AM. So I guess yeah, 3 to 4 AM changed. 4 UTC minus 4. Yeah. It used to be like 2 to 3, now it's 3 to 4. 10 11 for these stuff, so yeah, you can see that. They use 3 to 4 AM when London opens. They still use 3 to 4 AM when London opens at 4 AM. The indicator has it for the indicator didn't update the timings to account. Lux Argo needs to update the indicators. Oh yeah, I don't know then. Probably a 4 to 5, I guess. For indices, I think 4. That's why I just use the forex kill zones for forex. For indices, I'll probably use silver bullet. I try not to though. I try to use just regular macros. But I think he does need to update it. I think the community's probably gonna tell him. He has so many indicators, bro. It's crazy. I don't know how he makes them. One minute market maker small model for me. Last hour volume is dead rip. Yeah, no, it's dead, bro, for sure here. The market's better close. It's already closed. I don't even think it's gonna. I don't even want to look at the market maker models here on this. It's dead, brother. It's dead. Just let the market die down, bro. It's dead, bro. It's a clear market maker small model, but it just doesn't look ideal, honestly. It just looks dead to me, especially like since it's. All the volume looks dead already. Market closes at 6 o'clock. You just see we already closed here, so it's pretty dead. No market maker model for now, but assuming that we are early New York session, could we sell this current price action? Nah. Early New York session tomorrow. It's NFP week, brother. You don't wanna force your hand tomorrow, honestly. I feel like we're gonna get chopped up. Could you go over the your last 2 trades taken earlier this week or last week? Let's go see. I want to see. Let's go over my last trade I took right here. This was my last trade I took from last week. It was a Euro USD short. We on the 10K MT5. 0.5 R, so we lost 0.5 or 0.5. We lost 0.5 R. I don't even think we lost this. Actually, it was like a break even, I think. But once again, no hard time from premise. Use an order flow to understand where you're going. Or follow the market maker X model. No 22 entry model present here. We just forced the trade doing impulsive, and you just stop being so impulsive. 1 minute time frame. We had a market maker 1 minute SIBI push price lower market maker sell model finished nicely there. Damn, why are these lines here? Is that for the That is for the thing. I guess I can't get. Yeah, check. I'm about to after this. I was waiting for the market to. I didn't lose this actually. This is all the partials I took. I don't know why I have it as the loss. I don't know why I said it was a loss. I think it was more of a break-even trade. I don't know what I was writing. For sure, I don't know. I was geeked out. This is the first partial here, second one right here, I think, and then the third one, and then we got break-even. So it wasn't even like it wasn't a loss. I don't know what I was thinking. So it's a nice little scalp on EU. Again, higher time frame would have told us to wait more, insert all the way down here at the market maker. So model wasn't ideal. So we completed the market maker model after just juicing out these lows right here with this, and then we hit, I think, like somewhere in here, an area confluence. 5 minute makes it more clear. Then we hit a 5 minute order block. Microstructure shift told me lower prices were coming. I guess that was another GU SMT right here. I remember. And then EU never came back down to equilibrium of the range. We hit the order block and then rally. We had a 1 minute, I think, buy side imbalance too for GU. Yeah, I'm about to get to it right now. We can see here we had a bearish order block form. This right here, and then it didn't get ran through. It did get ran through. I mean, and then we had a smart money reversal there with SMT with GU clear as day. So I think here would have been a lot better to take a trade there. And then we had an inversion fair value gap. That would have been the best entry to go short, especially with SMT. So I was looking bearish for Euro USD Friday, but I wasn't able to find a trade. Again, because I was just stuck on the 1 minute. That's something I've been trying to not do. Stuck on the 1 minute. I'm trying to catch these meaty moves, bro. Like, I'm trying to catch this right here. Like, as soon as we break below tap back, I'm trying to catch that, bro. My stop above the highs. Just catch that move back down here to this market maker model. Even to down here, but I'll put it to down here to the next week. For sure. But here's the SMT right here. So this is EU right here. EU was stronger, GU was weaker. We should have waited for EU to get that smart money reversal confirmation and then start seeing GU reverse. That would have told us EU was going to reverse. So 1 hour time frame, we swept buy side liquidity. That would have been a nice area to target for shorts. Turtle soup entry there. So we could have waited for the buy side, higher time frame level, and then seeing the market maker sell model form. I think it was just too early to. We didn't view it. We viewed it too early, honestly, here. And then 4 hour time frame, hit an order block on the 4 hour, stabbed up into it, and then we had a sell side imbalance there. I think we hit that too, stabbed up into it, and then inside that daily sell side imbalance we dropped. So yeah, that's pretty much the trade. Let's go look at crypto. I think it's not moving that much. It's the same, honestly. Crypto spiked up. Bitcoin spiked up for the FOMC meeting, right? No, it's from earlier. Oh, yeah, it's clear SMT here on these right here. Bitcoin's not above these highs. ETH is. XRP, same thing. It's above. It's not yet above it, but it already hit it. Everything's already above. All these are already above except for Bitcoin. I think Bitcoin's lagging. Bitcoin's about to rally, I think. It gotta catch up. If it doesn't, then I don't know, man. Seems clear to me, though, honestly. We're just gonna rally. Let's see this right here. Just gonna hit the buy side imbalance finally. Whatever. Why isn't it showing on the daily? Daily's just. I forget we never put those like that. So what was on the? Let's see. Let's look at the highs right here. It's the 1 hour. What else do we see on the 1 hour? I think I saw a little breaker here forming. Right there. It'd be very ideal if we come back down here. Breakers, I love using breakers on the freaking crypto markets, bro. I don't know why. It's something with me and breakers, especially with Bitcoin. The breaker we saw in Bitcoin. This would be a very ideal trade for this one right here, like that. This is kind of like all high resistance too. Like all this right here. All kind of not too bad. I just want us to come down a little bit further, retrace, then we rally, pump up. I mean, we're already close above this right here too. So I want to see a little retracement. If we come back into here, I think I'll take that too. I'll just like scale in more as soon as we come back down further. So I think I'll take that, honestly. Doesn't look too bad. So this one, this one, what are we in? Like a what? Still an uptrend. this imbalance. Never heard of XVS? I didn't either, bro. Like some guy on like a stream 2 months ago, this crypto guy came into my chat. He was like showing me all these markets, bro. Like he showed me a market that was moving like crazy. I think it was this one, yeah. It was moving like crazy that one day. It was like, yeah, around here. And he was like, I'm shorting. I'm short, hitting a resistance level or something like that. This was on the futures chart. He was telling me use futures charts. I think this is a futures chart. Let's see. Yeah, he was telling me use the perpetual charts or like better or something like that. And then I was like, all right, I don't even know what I was doing back then. Until recently, I started like doing a lot more research. But then yeah, no, he was like showing me all these markets and stuff. It was crazy, bro. He was like, I'm shorting right here. It's hitting resistance. And I'm gonna hold it for the rest of the week. And then yeah, nah, he was just showing me all these markets. They're like juiced up, bro. I was like, damn. He's probably a breakout trader on his arts. He's probably a breakout trader on his alts. You think so? I don't even think he was a breakout trader. He was just like trading support and resistance, I think. Something like that he was saying. He was trading like he was a support and resistance trader. He's like, he's hitting resistance. I'm shorting. Someone's trading 3K% on breakouts. That's fucking crazy, bro. And he was shorting this shit like, bro, he was putting hella money into this market. It was like $1, bro. It's like $1 a contract, bro. He was just shorting it. He made some bands, I bet, because this shit dropped after. He was right. But XRP did hit the consequent encroachment of this. Pumped up. I want to see how we close on the week. I think we make this an inverse, come back down, and then eventually we start juicing up prices higher, probably for these. I just see us probably making this again inverse too. I just want to see us take out this high, make this inverse, push price higher. I think this is probably where the bull market starts to push up a lot more now. Same for Solana. Solana's been juicing out. We already took this high out. We're aiming for this one already, but we are kind of retracing now. Little inverse in there. Not bad, not bad. This one has been very, very freaking bullish, bro. It hasn't come down at all. ETH. I want to see either side get taken out, and then probably see the other side get hit. Kind of what I'm expecting. Same for Bitcoin. I want to see like either side get hit and then drop on the opposite direction. If we take out those highs, I want to see if we can drop, come back down, and aim for the sell side. But if not, we're gonna use that as, you know, inversion, push price higher. It's like it's multiple things you can have, I guess, on these. But we are hitting that monthly sell side imbalance here on this. Should hit my 1 to 3.5 soon. God damn. Yeah, ETH is a lot stronger than Bitcoin. You can just see that. That shit is just way stronger than Bitcoin right now. It just, you can just tell. If I pull them side by side, it's clear, it's obvious. So yeah, see this right here, this high, both of them had it. Bitcoin is still way below it. ETH is way above it. ETH has been lagging lately, so it's a good pump. That's good. That's good. You're in the profits. So wait, what'd you trade it off of? What? You trade off like Coinbase or what? You just like, you didn't future trade it, or you just like bought crypto? You just bought it. You just held it on a regular account, a regular exchange. Being X. Oh shit, you did futures then? Damn. How much leverage? Like 20x, 10x, 5x. You juicing it out, brother. 10x. How much? I don't even know how much I should put into my account. Honestly, I was like debating on how much whether. I was like, maybe I should just wait till I get funded and get some payouts and then start putting up. I was like, no, we need to do it right now. Just altcoins, shit coins. Could make a shit ton of money on them too, and then reinvest them into more better cryptos. So I don't even know. I'm just debating on. I don't even know. I'm just going all over it, I guess. Honestly, you don't need a lot. That's what I was just thinking. I was like, probably a couple hundred. Should be good. My dog barking at me again. I was thinking, but like since I'm new, I guess I'll just probably like put a little bit. I'll risk like $30. That's what I was thinking. I was like, man, since I'm new, I don't even know how this, like the crypto markets work yet, or like I'm not experienced in these markets. I should just probably risk as little as possible, and just work my way up after that. Honestly, just start off with a little bit and start putting more and more and more eventually after. So that's what I was just thinking, really. Turn off all this right here. So yeah, this is clear SMT, bro. Need to work on explaining my thinking. The communication or what? It's like it'll be better on the Discord for sure. Probably than the stream. But I'll probably I don't know. I was probably gonna end the stream here. Cause I already been how long? 4 hours now? 5 hours? 4? Might be 4 hours. The market already ended. I was watching Jerome Powell just talk. But I think that's it for all the cryptos, I guess. I just want to see them come down. Probably. After going up, come down. I feel like, I don't know. Maybe we probably won't get that. I feel like this one's just... I think they're very bullish right now. Except for Bitcoin. Bitcoin just kind of... really, it's kind of like in the middle. So, yeah. I think I'm just chilling now. I'm just chilling. Chilling, waiting like a villain. But yeah, I think I'm just in the stream there. My dog keeps barking at me. I think I'm gonna just go take her for a walk. Literally had to pull up all I had into crypto. Literally put all I had. Oh, okay. I was thinking about doing that, honestly. I was like, fuck it, let's just put everything I had into crypto and let's flip it, and then let's keep doing that. And then reinvest it into like other things, I guess. Because I think crypto is kind of one of the fastest ways, especially with the futures and the leverage. And then like the shit coins like this right here, like that's what they call them, the altcoins. Just putting them into that, I guess. That's what I was thinking. I'm about to end the stream here. I'll talk to you on the Discord chat for crypto. I'm gonna pull up my Discord right here. I'm gonna pull it up. Crypto being Gary and going parabolic right now. But yeah, I'm gonna end it here. I'm gonna take a little break off stream, just relax, chill, and yeah, that's pretty much it. I'll probably stream tomorrow for sure. So yeah, peace.